this echo really quick. It somehow... Oh, I know what it is. Okay, that should take the echo away. Sorry about that, guys. Thank you, Aaron. Okay, threw off my train of thought there. But yeah, so we're gonna run through that, and then lastly, Q4. After market close, we are going to go through the live Q3 earnings report and the live earnings call. We'll listen to that, and I'll take notes during that earnings call, and we'll see what happens in after hours, which I'm really excited about, because I think, UiPath is coiled up enough that if it becomes clear to the market that growth is actually going to be accelerating a ton, then yeah, Wall Street's not going to ignore free money pretty much. So once the narrative changes, it's crazy how re-rated UiPath could become. So I'm hoping that this quarter could be the catalyst for the re-rating, but it's impossible to ever know for sure, right? What's going to be the catalyst or how long it's going to take. UiPath could be flat for, until fiscal 2027, which would start next year. Maybe until Q4 when they guide for next year's earnings. And that's totally fine with me. I'm a long-term investor. The reason why I have such a big position in Path right now is because it outperforms all the other stocks in our spreadsheet over the 5 and 10 year time period. So I have made a short-term move, selling a little bit of my lemonade into UiPath, but not because I'm trying to get rich quickly, because I'm trying to get rich slowly. And after Lemonade tripled, UiPath now has, double our expected 5-year returns. Even though, UiPath still has, Lemonade still has over a 30% annualized CAGR in our spreadsheet, which is insane. Like the fact that UiPath can have double our expected return in our base case over 5 years over a stock that has a 30% expected compound annual growth rate in our spreadsheet. That's wild. So I know it's confused a lot of people. They're like, are you still bullish on Lemonade? Yes, of course. I'm still super bullish on Lemonade, but I'm more bullish now on UiPath. And it's not Lemonade has done nothing but execute perfectly. They've done nothing but actually achieve everything that I thought they were going to achieve. So I know it's really hard for people to be like, wait, you know what? How come you own so much UiPath now when you were saying all that stuff about Lemonade? Don't you still believe it? Yes, I still believe it. One way that you could think about this is insurance is worth 8% of global GDP, the global economy. 8% of it goes to insurance companies. Now that's everything: health insurance, car insurance, life insurance, liability insurance, business insurance. We spend a lot of money as a species on insurance, protecting ourselves from bad things. We're very risk averse. So that's a huge market for Lemonade, right? Only a $6 billion company or something like that, to be trying to automate an $8 trillion market. But here's the thing. UiPath is going for the rest of the economy. UiPath is trying to automate not only, the other 92% of the economy, but also all of Lemonade's competitors as well. So like 100% of the economy or 99% of the economy, everything that's not Lemonade, UiPath is trying to provide automation for. Now, there are a lot more competitors that are trying to do AI automation. I think that clouds the space a lot in a lot of people's minds. It makes them, a little bit confused about, who's going to win. Whereas, Lemonade's a little bit simpler. They're competing against companies that are 50 to 150 years old, that are not really embracing AI that fast. And that lack of competition, I think, is really comforting for a lot of people. I mean, it's comforting for me. However, I have done enough research now. We're probably nearing 400 hours of research into UiPath, the UiPath's competitors, over the last 4 months, where I'm now at a point where the space is not confusing to me anymore. And I think it's very clear that UiPath should be viewed by the market as one of the main beneficiaries of AI automation, yet they're viewed as a company being disrupted, which when the market is looking at a stock completely backwards, that is when the opportunity is the highest. And they were looking at Lemonade completely backwards last year, but it's not $11 anymore, okay? Lemonade is now, $70. Now, like I said, it still has a forward expected return. I still have a forward expected return for it of 30% a year. But it was insane. Like you guys wouldn't believe what our chart said when it was 11, right? If we still have a 30% expected return, like Lemonade had almost triple the forward expected return of any other stock in our spreadsheet. And now UiPath has double the forward return of any stock in our spreadsheet. Because, UiPath is at 11, right? It hasn't run to 72 yet. The market hasn't started re-rating it at all yet. And that is what makes me really excited, because I'm a contrarian investor. Now, I'm not just going to buy something that the market hates because the market hates it, but that's a reason to look into it. Because if you can bet against the market, this is actually a Peter Thiel quote, if you can bet against the market and be correct, that is how you make life-changing money. Now, I do this to, I think, a far more insane level than most people would ever dream. But that's because I put in more insane work than most people would ever dream of putting in as well. Like obsessively 8, 10, 12 hours a day, listening to interviews, running analysis, thinking about bear cases, listening to competitor product reviews, listening to competitor earnings calls. Like I obsess so that I can build the confidence level high enough so that I can make the moves that everyone else thinks are crazy. Now, does that mean I can't be wrong? Of course not. I could still be wrong. It's totally possible I could still be misseeing something, which is why I obsess 8, 10, 12 hours a day trying to figure out, okay, is there something I'm missing? Like, how come this seems so obvious to me and not obvious to the market? But once I figured out the reasons I think the market hates it, and I understand those, and I understand why those reasons are wrong, then, you can start to invest $10 million into a single stock. And still sleep like a baby. Now I have to admit, last night I did not sleep like a baby just because it's happening, today. So there's a lot of excitement. But yeah, without further ado, let's get into this agenda here. Oh, and actually, there's one thing I should add here. I want to talk just for a second before the earnings call, if there's time, about the two biggest bear thesis points that I personally think are like the two strongest arguments against why UiPath might not become, $100 billion or $1 trillion plus company, like I think is very probable. Okay, so UiPath's history and valuation. So I want to start just by reading this tweet that I posted a little bit ago, and I know it's going to put some of you guys off, especially if you're not religious. That's totally fine. Hopefully, if hearing this like turns you off so much that you have to click away, that's totally fine. I understand, but I have to operate within the world that I think is most likely to be true. So that is where this comes from, and then also understand that Christians are, it's not like Islam, right? Where Islam wants to kill anyone who's not a part of the religion, and it's like illegal to leave. Like it's not like this at all. Jesus called us to love our neighbor as ourselves, to turn the other cheek. It is about having grace towards the world. It's about being honest and truthful and living for something greater than this present moment, which I think, is actually what makes capitalism possible. It's what makes the West work. So just keep that in mind. Hopefully that can, give you a little bit of what's the word? Take a little bit of your angst away while I'm reading this if you're not religious. So I said, for the glory of the creator of the universe, who I believe entered the game he created as a player, to live a perfect life, die for our mistakes, and then raise himself from the dead as an example of what he will do for all who follow him. Amen. So Jesus, a little bit of my background, gave me the grace and wisdom, I think, to go all in Tesla. By understanding how battery cost reductions were going to flip the company to profitability, This is way back in 2019. I literally just saw this chart of battery cost reduction, and I was like, wait, this is the single biggest cost in building the EVs. They're selling them at a loss now, but one more year of this cost decline, and they're not going to be selling these cars at a loss anymore, and the market has them priced for bankruptcy. Maybe there's some opportunity here. So I think I had the wisdom to see that and realize that they were going to flip to profitability, and they weren't going to go bankrupt. And the market was totally wrong about Tesla. And this was prior to the stock going up 20x. Now, I did not think the stock was going to 20x, but that's what happened. So using leverage, which I don't recommend, by the way, but if you're starting small, I think leverage is a lot better than using options. Just my personal opinion, because there's no time requirement on it. With an option, it expires worthless. With borrowing money to own the stock, like you actually own a productive asset in the world. And for we'll get into this, but for a company like Path that's trading only 11 times look through earnings, like that means you're going to get a higher return than your interest rate even without any revenue growth. And if you don't understand the yield on earnings and that sort of thing, like read Peter Lynch's book. Read One Up on Wall Street. It will help you so much. Like stop investing with a huge disadvantage when you could just educate yourself a little bit, and that could turn into an advantage over everyone who doesn't understand how to value stocks. So prior to Tesla 20xing, so using leverage, this brought me from having $20,000 that I had saved over 7 years of work running. I started a YouTube channel when I was 14 years old, and then I worked a few other jobs as well, and I was able to save up $20K from that. Using leverage, I was able to turn that $20K into at the peak, $1.6 million. Now, I did not sell. I did not deleverage, even when the valuation got insane. This was before I understood valuations. I just believed in the company. I didn't realize, hey, Tesla trading 300 times forward earnings is probably a little bit expensive. You probably shouldn't be fully leveraged into a stock trading 300 times earnings. The market is pricing in all the future growth that you see anymore. You no longer have an advantage over the market. I did not realize that. So I held my leverage all the way down to 200K. So I went from 20K to 1.6 million down to 200,000. And in the end, over a 3-year period or something, it ended up being a 10x of my net worth from 20K to 200,000. But I learned a ton, and I started to realize how important valuation actually is. And now we've seen Tesla flat, for 5 years or 4 years since then. They haven't grown revenue at all, so it's still a little bit expensive, to be completely honest. But I had to learn that lesson. And I think that is an important lesson that is changing how I'm playing Lemonade now. Now, Lemonade is not trading 200 times forward earnings. Lemonade's not even profitable yet. They're not going to be profitable next year. They're going to be GAAP net profitable. They're guiding for the year after next, so 2027. That's another reason I think I might have a little bit of time to grow my portfolio in UiPath. But more recently, so after 20 or 10xing in Tesla, I made some money for a few years. I made money on HIMS and Palantir. I bought 100K of Palantir at $7.70, but I sold it after it doubled. I was overreacting from holding Tesla way too long to holding Palantir way too short. So I had to learn some valuable lessons. Trying to self-correct and overcorrecting myself. But then we get to more recently. He, meaning I believe God, because he created me, gave me the grace to understand how a company called Lemonade would drastically lower the cost of insurance using AI for everything. From underwriting to sales to claims payouts to fraud detection. And guys, before I started looking into Lemonade, I had never looked into an insurance company before. So I had to educate myself. It literally took probably 1,000 hours of work, because insurance is not an easy business to understand if you don't know about loss ratios and operating expenses and your expense ratio and how that affects your gross margin and how you can invest float and how important a loss ratio is for a company, and understanding the AI side was only part of that, but I had to understand all of it in order to go all in on Lemonade. And I did the work. I did the freaking work. That's the only way you can build the confidence that you're not YOLOing, so that you actually know the true intrinsic value of what you own, so that if the stock goes down, you are excited to buy more instead of freaking out thinking you were wrong. This is why most people lose money. If UiPath goes down today on earnings, but the guidance, like nothing has changed, like my thesis is still solid, which they could say things that change the thesis. And if that happens, I have to be willing to pivot. Why? Because my identity is tied to believing the truth. My identity is not tied to any specific stock. So if evidence changes and the truth is different, I will change my opinion. You cannot tie your identity to an opinion you have. You have to tie your identity to seeking the truth about the world that we live in. That's how you pivot. And, being a national debate champion was really helpful because I had to debate both sides of issues throughout my informative years from, age 16 to age 8. Well, actually, I joined in junior high. My mom forced me to because I couldn't make any friends because I'm such an introvert. She forced me to do debate. But I had to debate both sides of issues. And this allows you to steelman the other side, to truly understand the arguments on the other side better than your opponent does. And that's how you get good at debate. And that is how you can, get good at investing as well, because you understand like what's the real chance this is going to succeed? What's the real chance this isn't? What are the strongest arguments for why it is going to succeed and why it isn't? What are the strongest responses to the bull case and the bear case? And that's what debate taught me. But I digress a little bit. Let's keep going. Lemonade is saving incredible amounts of money and reducing the cost of insurance for their customers. This story is still playing out. Yet it has already brought me from millionaire to multimillionaire. So I was able to get back from 200,000 back to over $1 million through Tesla recovered a lot, back to its all-time high. And like I said, I invested in Palantir, invested in HIMS, had some other good wins. I even made a lot of money on Zoom, by playing it right. I made a lot of money on Square by playing it right. But yeah, Lemonade brought me to now. My portfolio is worth millions. So by Jesus' wisdom, in researching AI and automation, I have found another company bringing many of Lemonade's advantages to the rest of the global economy. And I think it would be good if more of the church owned this company. Personally, I will be margining into Path with up to $20 million as it begins its all but inevitable run. No human plan is certain, but the inertia of human progress, when it aligns with God's divine plan, makes some things inevitable, even if we only know in part what those plans are. For anyone who believes in Jesus and sees this tweet or post, I recommend that you buy as much UiPath as you can. This is not advice, and this is probably a good point to say. I'm not a financial advisor, but as a friend and a Christian brother, I think it would be good if the church owned more of the AI companies that are going to be automating the global economy, because that will give the church a lot of money to help those who are displaced and that sort of thing, which I'll get into a bit later. But yeah, I should say, nothing in this live stream is financial advice. I'm not a financial advisor. I am sharing my honest opinions as honestly as I can share them. But I can be wrong, and any prediction about the future can be incorrect. So just keep that in mind. Every single task, especially after physical robots like, Tesla Optimus Spot and other humanoid robots that are being built, especially after human robots, but 100% true for all digital tasks today, will be nearly fully automatable with AI. In the long term, this will make the price of everything collapse and will lead to a level of abundance and affordability the world has never seen. But in the short term, there will be growing pains. We are going to see people protesting AI. We are going to see the streets filled with disgruntled workers that no longer have a job. There will be growing pains. Anyone who pretends to know what these growing pains will be is only guessing. But with all revolutions, there are growing pains. The Industrial Revolution, it led to a lot of employment, even tractors, right? Like if you think about early on in the economy, why is the jobs report that the government releases called non-farm payroll? Well, it's because almost all payroll was farm payroll, because almost everyone had to literally manually work the fields in order to eat. But when the tractor came, yeah, a lot of people who were working in the fields lost their job, but then it allowed the whole economy to specialize more, and specialization has created a ton of benefit. Like, people, instead of working to grow crops, they can work on, creating the computer and the internet and training large language models and video and image models and so many other types of AI models as well to help us to automate stuff, to replicate human intelligence. Like, none of this would have been possible if we were all still working on the farm. So when AI is automating a lot of current jobs, it's going to be hard for a little bit. And there will be a lot of people that do have a difficult time pivoting, but there will be far more jobs created than are destroyed. And I can say that with a lot of confidence because every other revolution that destroyed jobs created far more jobs than were destroyed and allowed for far more specialization. Like there's probably going to be movie making, for example, is going to be decentralized out of Hollywood, and there will be hundreds of millions of people that can make, AAA quality movies with AI. Like, that's going to be a whole new industry that doesn't exist now. There's going to be probably movies on demand where you just type the prompt for a movie and then you can just watch a movie live stream to you that literally no one else has ever seen. There's going to be a lot of really cool new jobs that we can't even think of. And humans are going to love it because repetitive tasks and boring tasks, that is what we're going to set AI to automate first. And that's what Path is enabling us to automate. So being an owner of the companies driving the AI revolution is the best way for the church to be able to help out those in need who are negatively impacted in the short term. Path will be automating tens of billions of annual man-hours of work over the next few years. I really believe this. I do not know if any of those billions of work hours are currently what puts food on your table, or maybe what puts food on my table. So if you own the stock, then these work hours will still put food on your table and the tables of those that God puts in your circle. So I'm going to run through some numbers here because I want you guys to understand the current valuation metrics. And if you're not experienced with investing and they don't make sense to you, I hope that it does not dissuade you. You do not need any education at all to download Robinhood and buy the stock. However, you should read One Up on Wall Street by Peter Lynch, and you should read it over and over again until you understand it all. And there's Philip Fisher and Warren Buffett. Read the great investors who actually beat the market. Don't watch CNBC. Don't read any college textbooks. They're going to teach you how to do average, how to do terribly. If you want to do average, you probably learned how to do that in middle school, as Peter Lynch says. So read the greats, read how they thought about the market, because they were the ones who actually did it well. And yes, there's probably still going to be some false things that they believe, but at least the false things that they believe did not stop them from outperforming the market. Whereas most of the false things that the average person believes do stop them from outperforming the market. One thing that gives me confidence to be all in, or nearly all in Path right now with just 1.5 million in Lemonade as well. But what gives me that confidence is hearing Warren Buffett say, well, diversification is stupid. And Peter Lynch say, if I could own only one, if there was only one stock, I would be comfortable owning only one stock. Hearing these great investors say that, it's really, really helpful because these guys are brilliant. So, read the best. But if you don't understand right now, that's okay. Asking AI about these numbers is a great way to learn more if you're curious. So historically, UiPath is a fast-growing robotic process automation company that builds deterministic processes to automate Fortune 500 company workflows, the largest companies in the world. And I believe their historical CAGR since going public is 40% a year is the average. So people are looking at a stock that 3 quarters ago did 4% revenue growth, and thinking, "Why, this is a slow-growing company. Why do you like it?" Not knowing that is actually the outlier, not the 40% that the highest I got them getting to in revenue growth is 30% going forward. And in my model, they don't even get to that for 4.5 more years. Next year, I'm only expecting 16% revenue growth in my model, and I think they might absolutely destroy that. And I still think it has double the returns of the next highest stock in our spreadsheet. So just know, okay, so we've gone from 4 to 5 to 13. Last quarter was 13%. Actually 14% revenue growth, 11% ARR growth, which is annual reoccurring revenue growth. So yeah, people are like, it's growing 14%, not realizing that, we're climbing out of an outlier bad period. Already using robotic process automation, they have been able to automate hundreds of millions of work hours. So now adding AI-powered agents into these workflows, and hopefully we'll have time to watch a Maestro demo here. But adding AI-powered agents into the workflows makes the process 10 times more useful by introducing human-level thought and reasoning within them. So essentially, in the past, and they already have 10,000 customers, they have hundreds of customers paying over $1 million a year for UiPath's robotic process automations. In the past, UiPath was pretty much automating with their hands tied behind their back. Their robots did not have brains. And now the robots are getting brains. And people are bearish on the stock. What? That doesn't make sense. They're getting 10 times more valuable. Their automations are going to be able to do far more without humans. And people are getting bearish on them? That doesn't make any sense. So adding AI-powered agents into these workflows makes the process 10 times more useful. It's at least twice as useful, probably, but I think it could be literally an order of magnitude more useful, which makes it 10 times more valuable, order of magnitude more valuable to current customers, and 10 times an order of magnitude more valuable to prospective customers, which is probably why Daniel Dines is saying that they have now more customer demand than they have ever seen. And I have that clip lined up, but we'll listen to it in a minute. Instead of only being able to help humans by doing the most repetitive and brain-dead tasks, putting AI agents within the workflow orchestration now allows full end-to-end automation of entire job roles. Okay, this is moving beyond, hey, companies are gonna, they can talk to ChatGPT and it can help them. Or, you copy paste something that you want to write into ChatGPT and it helps make your post better. This is fully autonomous end-to-end workflows that AI is able to do on businesses' current tech stacks. The current SaaS, the current software as a service that these customers are employing, they don't have to change that. UiPath adds on top and literally empowers AI with all the toolbox they have, the huge automation toolbox they have, allows AI to literally use your Google software, use your Salesforce software, use, access the data in your Snowflake, right? You don't have to change what software you're using. And that is what's so powerful about this is you can do full end-to-end workflows on your current software by orchestrating it all through UiPath Maestro. Despite the insane potential and rave customer reviews, Path currently only trades 11 times EV to look-through earnings. Let's break down what this means. So EV stands for enterprise value. It's the actual price that you're paying for the company when you buy the stock. In Path's situation, they have $1.3 billion in cash and cash equivalents. Some of that's in short-term investments, and no debt. Now they do have some liabilities, but they don't have debt. And if you do assets and take out all the liabilities, I think they have about 1.6 billion in shareholder equity, and 1.3 billion of that is in cash and cash equivalents. This makes their enterprise value lower than their current market cap. And as an example as to why, if you were buying a house that had $100,000 of cash sitting inside that you would own once you bought it, you would reasonably back that cash out of the price that you're paying for the home. So if you bought a house for $300,000 and you knew that there was $100,000 of cash, sitting on the table inside that was going to be included in the deal, then, you could reasonably say, okay, I'm buying this house for $200,000. That's what EV is trying to do. You're adding debt to the market cap. You're subtracting cash and equity. My look-through earnings number. So this is now the second half of EV to look-through earnings. My look-through earnings number applies my long-term expected profit margin on the trailing 12-month revenue. And guys, the reason I'm doing this is because when you're investing in a fast-growing company, a young, immature company like Lemonade or UiPath, like Lemonade, they're not going to have any profit, any GAAP profit probably until the end of next year or the beginning of 2027. So how do you know how expensive a stock is? Well, you have to know, okay, what amount of profit margin would they have on their revenue if they were a mature business? And then you can apply that mature business profit margin. So you have to understand what profit margins competitors have and how much more efficient Lemonade might be than them. And you can apply that long-term profit margin on today's revenue so that okay, so obviously right now they're reinvesting in product development, they're reinvesting in marketing, they're just investing all of the potential, cash flow that they could be claiming, they're reinvesting it into more growth. So you're not going to see it on the balance sheet today, but you can know this sort of business, how profitable it is likely to be in the future. So that's what I'm trying to do. I'm trying to remove all of the present noise so that I know, hey, if I was buying this company right now and I thought it was going to grow 0% forever, and they were actually managing the business to the highest profit margin, what would I be paying for it? So in this situation, I'm expecting very conservatively, as remember, they are automating entire job roles, which inevitably makes them more efficient. And Microsoft currently has this level of net profit margin with far lower gross margins. UiPath's gross margins are above 80%, whereas Microsoft's gross margins are around 65%. And has less automation than UiPath will have long-term, and probably Microsoft will also have long-term, a lot more automation. But I'm expecting that past long-term profit margin, net profit margin will be around 35%. And just so you know, this is almost double the long-term net profit margin I'm expecting for Lemonade. Why? Well, Lemonade, of all the premiums they collect, they're going to have to pay out probably around 65% minimum in losses, in claims, because as an insurance company, you collect money and then someone crashes their car. Well, you have to pay for a new car for them. So insurance companies, generally, sometimes claims can be 90, 80% of the premiums that they're collecting. For Lemonade, because they use AI, they're a lot more efficient. They're a lot better at pricing risk. Lemonade's in the mid 60s of a loss ratio. But guess what? UiPath doesn't have a loss ratio at all. So I think that Lemonade can get to like 20%, maybe 25% net profit margins, which would be twice or three times more profitable than current insurance companies today. UiPath has 80% plus gross margins and no loss ratio, right? They're not providing insurance for anyone. They're selling a software that once they've built it, they can just sell the new software to new companies for very little cost. Now, they do have to help build it. They send forward deployed engineers to the company, help them orchestrate what the whole workflow is, help them plug in all the RPA bots and AI bots so that it can, and like correct it, give feedback to the AI so that the task can actually run with high efficiency and success and with governance and accountability and all that tied in. So it does take some engineer effort to go to these big companies at first, but then it's just usage money coming in with almost no cost to them after that. So I think 35% net margins is probably conservative, because then the other thing you have to keep in mind here is at Fusion this year, which was UiPath's big automation event that they did in Las Vegas, Daniel Dines said that he thinks they're going to be able to start growing because now they're using Maestro internally. He thinks they're going to be able to start growing without increasing the headcount that they have. So I'm looking forward to them say that again in the earnings call. I think analysts would love to hear that. It's such a crazy thing. Analysts might not even believe it if Daniel Dines says that. But because of this, 50% profit margin, something like this, it's not crazy. It sounds crazy, but it's not crazy. So my base case is 35. So if you apply a 35% net profit margin to trailing 12-month revenue, the EV to look-through earnings is 11 times. So you're paying 11 times look-through earnings for UiPath, which means, let's just for easy math do 10. If you're buying a company for 10 times earnings that has 0% revenue growth forever, that's not a bad deal, because that means that you're getting a 10% return as an owner per year, which it can be paid to you in stock buybacks, which, UiPath is doing a ton of right now, literally like $1 billion of stock buybacks recently. It's only a $7 billion company and they've bought back almost $1 billion of shares, which they destroy, and that increases all current owners' ownership. Now, they do pay out a lot of stock-based compensation to employees, which I actually like a lot because it aligns incentives. So the employees are owners too, just like me. Daniel Dines, by the way, is a 20% owner of UiPath. Huge. That's what Elon wants to be of Tesla and can get to if he achieves his pay package. Daniel Dines already owns around 20% of UiPath stock. So he is a huge owner. So that aligns incentives as well. But a company that you buy for 10 times earnings, that means it takes 10 years of earnings before you fully make back your investment, which means you're getting a 10% annual yield on that investment. And after you make back all your money, you still own the stock, and now you could buy another one, that has a 10% yield. And just so you know, government bonds are 3 to 5%, probably not even 5% anymore, 4.7, and falling rapidly as quantitative easing stops from the Federal Reserve and interest rates lower. Your risk-free rate of return, which isn't really risk-free because the government is very poorly managed, but people view it as risk-free. Your risk-free rate of return is 3-4%. So buying a 0% revenue growth company at 10 times earnings, destroys what you'll get buying government bonds or even company bonds. So it's an undervalued. It's like the S&P 500 is trading like 20 plus times earnings. So UiPath, its look-through earnings is half of what the S&P 500's look-through earnings is. Which is crazy for a company that, you know, could put up 30, 40% revenue growth numbers, 50%, 60% in a bull case. Like, that's wild that you can buy it for 10 times earnings. It doesn't make any sense. The market sometimes is insanely inefficient. So that is why I feel so confident, because even in a scenario where the rails fall off, everything about my base case is completely wrong, and the bear case happens, I still out-earn the margin interest rate that I'm paying over the next decade. That's crazy. In a bear case where you can still easily get 15% annualized returns. And then in a bull case, you can get, you know, way higher than that. And the company in my base case, which I have, I could show you guys, should have actually already had that ready. I could show you guys the spreadsheet. I'm pretty sure it's like 6-7 times return I'm expecting in 5 years for UiPath. And honestly, if the bull case happens, then the base case is thrown out the window. We could get a 10x in like a year, which is why I think Path could be the best performing stock in the stock market next year. So hopefully you can understand my reasoning there. Okay, so when I apply a 35% profit margin on trailing 12-month revenue, the stock trades 11 times this value. For context, the S&P 500, the 500 biggest publicly traded companies in the US, trade almost 30x. Now, we have had a little bit of a pullback, so it's not quite that high now. If you look at the Mag 7, it's almost still that high. The value of trailing 12-month revenue. So almost the 1/3 the valuation of the Mag 7 and growing faster than the Mag 7 already, by the way. Like, we don't even need any growth acceleration this next quarter. So that means that, you know, UiPath could triple, and then it would be trading kind of in line with Mag 7 stocks. Or if you want to think about it compared to Palantir, because Palantir is very expensive right now, UiPath could 10x. Okay, so it could go up in value by 1,000%, and it would still be trading at a 60% discount to Palantir, just to put things into perspective. So you're buying a company at around 10 times earnings that's stable. So, if you're buying a company that's 10 times earnings, that's stable, but has no growth, you would earn a 10% return. Okay, I've already gone through all of that. So yeah, just trading like a company that has no growth. A company like Palantir, who the market already understands is automating jobs and has a lot of growth ahead, trades 300 times next year's earnings. Path stock would need to increase by 1,500% to similarly trade 300 times next year's expected earnings. So with 20 million in Path, which I hope to own as close or prior to UiPath's next earnings call on December 3rd as I can, I've only gotten, I think, to about a little under 13 million, I think is what I'm at right now. So I will continue buying after earnings, especially if they're good. I still want to almost double my Path position. I would like to get to 1.5 million shares, maybe 2 million shares. Right now I'm a little over 900,000 shares. The company increasing revenue by 5x over the next 5 years and trading 100 times look-through earnings in 5 years would make me a billionaire, which is crazy to think about. When I started investing in 2019, I had $20,000 to my name that it took me 7 years to save. And now 6 years later, I literally think I have found a path to billionaire, which is crazy. So predicting the short term is impossible, but I know UiPath's product is a game changer, and we'll look through that. Long term, all of this money will belong to God and does already belong to God, you know, whether I'm managing it or someone else is. And I promise to spend at least 90% of it to further his kingdom and feed the poor. And this is because, you know, I'm not living for this life. I'm not trying to store up treasures in this life. My goal of making money is to use that money to store up treasures in heaven where it's actually going to matter. I'm a long-term thinker. If you guys haven't, like there was a period of time where I read a bunch of atheist books and I thought God wasn't real. And it was hard to get out of bed. I'll be completely honest, because I am such a long-term thinker that I was like, well, it's all, I don't want to use expletives, but freaking pointless. It's all freaking pointless. It's like, that's all I could really think if I was just going to die. It's like, yeah, sure, I could get some pleasure and then I die and no one remembers me. You know, even if I do something great, whoever's alive in the future is just going to determine, what they say about me. It doesn't matter. And then, a couple generations from now will be forgotten anyway, even if I do something big. So I was like really depressed, and it's only because I think that eternity is real. Through logic, by the way, because I do not want to believe something that's false just because it makes me feel good, but I actually believe it's true. And that gives me so much motivation to wake up every day and makes me so excited about what I might be able to use this money to do for the kingdom of God, hopefully guided by his wisdom, because I spend so much in the quiet place with him. And I could tell you some stories that we won't get into because this is an investing live stream. So I end with a prayer here. Lord, give me the grace and wisdom to glorify your name. Let my heart not ever fall in love with this world, for it is not my home. I would rather become destitute and homeless, guys, and I really believe this. I would rather become destitute and homeless than become a billionaire and love anything more than Jesus, who died on the cross for my sins. By your loving mercy, give me the wisdom to follow your will forever, and I do think it will be forever by his grace. Amen. So then this was my current path position as of last month, so about 2 weeks ago. So I've almost doubled my path position actually over the last 2 weeks. But yeah, so I just wanted to share that with you guys. Also, if you guys are enjoying this live stream, I would really appreciate if you would tweet it out on X. That would really help me. We are now only probably about 45 minutes from past Q3 2026 earnings being released. So it's getting close here, but now I have some really interesting stuff I want to try to run through real quick. So we went over past history. Oh, well, I guess I could, let me show you guys just really quick so you understand the history fully. Just so you know where path is. So if we look at the 5-year here, path went public in 2021, almost doubling year over year. And then their growth started slowing down. So the stock has fallen from a high of 85 now to 1497. So, we're down almost like 80% from the highs, 78% from IPO. It's crazy. The stock is down and counted out. So it's very similar to Lemonade, right? Like it's so similar to Lemonade. When I was pounding the table on Lemonade, we were down here 17, 16, even down here, I was pounding the table so much when we fell back down to 25. Like this is when I was all inning, 300% leverage into Lemonade because the stock did not deserve to be down here. But thankfully, we've gone from a low of 11 now to 70. So we've 7x'd on Lemonade. The stock is still undervalued, but far less so than it was. So it's kind of the same thing. I love buying stocks when everyone hates them, but when I know they're actually great. So that's the story of UiPath right now. So let me show you a little bit of a product demo here. I want to play this in 1.25 speed because I think a lot of people don't actually quite understand what UiPath does yet. Oh, and by the way, on YouTube, drop a thumbs up and you guys could like this tweet as well. So yeah, I think a lot of people don't understand what UiPath does. So I think this will be really, really helpful for everyone. And then I want to play a couple of clips from a few earnings calls, and then we'll, if there's time, because, we're now probably, 35 minutes from the earnings release.
Great. Thank you. Good morning or good afternoon, everyone. Thank you for joining us today. I'm Graham Sheldon, the Chief Product Officer at UiPath, and I'm really excited to walk you through how our customers are actually able to unlock AI transformation and drive real ROI and time to value through our platform. I'm going to start this morning by giving you a view of our platform and how we've reimagined it to in this new Act 2 that Daniel described around agentic automation. There we go. The UiPath platform that we're building is built on our strong foundation in automation. Our customers can now easily combine the best of what robots have been able to do about deterministic, rules-based kinds of work with what agents and LLMs are now capable of doing, the more dynamic and goal-seeking type of work. And it's the combination of that in an end-to-end process that can really help transform the way that we do business and the way that work gets done. People are still at the heart of this, and they can really then focus on the critical decisions and the high value work. And that together runs seamlessly across all of the workflows, all of the systems, all of the people in an organization in an enterprise grade governance framework so that you can feel confident and have the trust that those processes are running the way that you want to and you remain in control, fully integrated into your systems, regardless of whether they be legacy ones or newer ones as we move forward together. So why is this platform uniquely able to deliver these AI transformation results for our customers? First and foremost, we believe in what Daniel described for these mission critical workflows. You really want to have specialized agents, not ones that are swarms of agents that are going to go run around and do things that you can't understand or control. And our customers demand that they have real insight and into what those agents are doing, specialized for particular tasks so that you can trust that they're working in a way orchestrated across the workflows with what people need to do and what robots will need to do so that you get the highest level of accuracy, reliability, and governance. Those agents are only as good, though, as the actions that they take. And those actions are based on the best-in-class automations and tools that they have. Again, over any system or any type of data, we've built into the platform those capabilities, and we believe that they remain best in class. That's work that's done, that's orchestrated with people and with robots to be able to operate across an entire workflow through end-to-end agentic orchestration, which I'll show you in a few minutes. The UiPath platform supports pro code, so professional developer tools, and those can come from any vendor, including our own, so that you never get locked in and you can use the best-in-class models, best-in-class agents from any provider. But we also have low-code approach so that it can scale out and you can you can have your business users and domain experts participate in the development of those agents. And underpinning all of that, we're investing a ton into making sure that you can track what those agents are doing, govern them, and manage them, and they achieve the highest levels of accuracy and reliability. Now, we've developed a ton of new innovation on the platform, but I want to focus on a few highlights that take these promises and make them a reality for our customers. First is a product we call UiPath Maestro. So this is that concept that Daniel described in terms of agentic orchestration. With Maestro, we're not just simplifying the automation itself, but actually how teams manage it. It's actually a collaborative surface where you can design, you can manage, and then you can optimize these workflows and plug in agents for the right tool for the right job. Plug in robots for the right places and allow people to participate as well, orchestrating all of that seamlessly in our system. Next is Agent Builder. Agent Builder is a low-code interface for designing these specialized agents and has an integrated experience to help you test and evaluate that over time so that you get the highest level of accuracy and reliability from those agents. And last but not least, we know there's a ton of data that's still locked away in unstructured or semi-structured data like documents and communications. And IXP is a product that now allows you to sort of extract and make that data really useful in these end-to-end automations. And all of these capabilities come together. I'm going to show that to you in just a moment on the platform. And so this platform is trusted by over 10,000 organizations worldwide. And we have customers like WEX that are using these agents to tailor customer profiles and improve sales engagement. You've seen lots and tons of examples of this across many different industries, many different departments to truly transform the way people work and get incredible results. Now, I'm going to focus in on one example of that in the context of insurance claims processing. So in this example, today, people are doing a lot of manual work still. You're gathering critical information, you're doing some research, you're updating systems of record and systems of engagement, communicating back and forth with the claimant, and it's a really difficult process. It's very messy. There's a lot of swivel chairing happening. And think about that daily reality for an adjuster with multiple legacy systems simultaneously open, and it's really hard to stay on top of this. It's also fairly error prone. And those mistakes cost time, but they also cost patient outcomes. And that's what we want to make sure that we can really transform. Now imagine a transformed experience where instead of that adjuster doing all of this busy work, instead of that, agents and robots take care of all of that sort of repetitive paperwork. And they can focus really on just the part where the final decision needs to be made.
Okay, so I want to pause it just for 1 second. I think you guys who have been following me through the Lemonade journey will kind of understand what I was probably thinking when I was listening to this for the first time. Because I thought, Lemonade was going to be the only one that was actually going to be able to utilize AI to automate claims management. And then I was like, wait, there's a company here that claims that they can help Geico and Progressive and all these legacy insurance companies have automated claims processing as well. Wait a second here. So I was still very skeptical. Trust me, I was still very skeptical the first time I was seeing this. But I was starting to think, wait, maybe UiPath, because I knew it was cheap already. I was like, maybe UiPath wouldn't be a bad stock to add as a hedge against my Lemonade position. And that was kind of how it started. But the more I learned, the more my mind started being blown. And that's when I realized, wait, UiPath is trying to automate, the 92% of the global economy that's not insurance and the 8% of the global economy that is insurance. And Lemonade's just going for the 8% that is insurance. Which means that, like, even without being an insurance company, UiPath kind of became a competitor with Lemonade. Now, I still think Lemonade's going to be far ahead of the competition. Having UiPath in-house or Palantir in-house is a huge advantage for a company, so don't get me wrong. But when I was listening to this for the first time, it started to make me think that maybe some of these old insurance companies are gonna be around a lot longer than I thought initially. And they're going to be able to get a lot of efficiency bonuses, a lot more than I thought initially, even though they will stay behind Lemonade, who has their own proprietary models they're training and risk models that they're training and all of that.
Where the agent has already made a recommendation on the basis of all of the data that it's extracted, all of the policies that it's been applied, and they can just do the last mile. The critical decision about whether or not to move forward and any additional information that can help this particular transaction go as quickly and as seamlessly as possible, with natural language tools to help them get their job done even more efficiently. So how do we make an experience like this one a reality? What I'm going to do is now show you a demo, but I want to start with the process. The process, in a very simplified way, again, involves a lot of manual work. And with RPA and automation today, robots are already doing a lot of this work, getting the critical information, making some simple rules-based identification of the claimant, and then updating the systems of record. Well, now, with UiPath agentic automation innovation, we can now take out some of the rest of this. You can take out a lot of these sort of more nuanced and dynamic decisions and make recommendations to people, like doing the initial duplicate claim check or checking for fraud, as well as a determination of eligibility. And then you want to orchestrate this process end to end. This is obviously an oversimplified view of this process. The process actually is quite a lot more complicated than that. And a lot of the time to value is really unlocked when you can describe this in a way that lets your developers and your business users collaborate together to make this a reality. So now I'm going to switch and show you what that looks like in the UiPath platform. Imagine this particular process is now something you can model directly with UiPath Maestro. I'm going to switch over and show you what that looks like in our platform. And here you go. This is that same HSA process working end to end in the UiPath platform. And as I mentioned, you have some robot tasks where you're gathering critical information, you're updating systems of record. You also now have agents.
I'm going to pause it for 1 second here again. And just so you guys know, market closes in about 18 minutes. And I'm guessing we'll get the earnings report pretty quickly after market close. So the time is kind of down. We're getting close here. And then we will look through the whole earnings report for Q3. And then we will excitedly wait for the earnings call as well, which is supposed to happen at 5 p.m. Eastern time, which is 4 p.m. My time. But I just wanted to quickly pause it here and say the way that I started to realize RPA, which is, if you guys don't know here, let me, there's a tweet I should show you guys. UiPath is the dominant player in RPA by far, which stands for robotic process automation. And right now, the market thinks that RPA is being disrupted by AI. So that's the current narrative, but that's completely wrong. But first, let me just show you here. You can see this. Estimated RPA market share by leading vendors is according to AI Multiple. UiPath by AI Multiple is estimating has 57% of the market for RPA. They destroyed everyone else. Microsoft destroyed. Automation Everywhere destroyed. Blue Prism destroyed. And by the way, I've looked at some of these demos. UiPath's better. Okay, it's better. Now some of these other companies might catch up a little bit, but UiPath already destroyed them once. So how come the market is giving zero credence to the fact that UiPath might destroy them again in the age of agentic AI? You know, just a thought. Okay, let's. Sorry. But so let me explain why the market is wrong that RPA is being disrupted. So AI is the first technology that's not a tool. Okay, all the other previous technologies that we have ever made in history is a tool that humans can use. So tractors, you know, they're a tool. Humans, we can use them to do more work. The internet is a tool humans can use to greatly speed up communication and speed of learning and you know, bring cultures closer together. Everything has been a tool. RPA, it's a tool. Now it does work it can work autonomously, but it's a tool that humans use to help do, you know, boring tasks that you have to do over and over and over again. Well, AI, it's the first thing that humans have made that's not a tool, but it's a user of the tools. Okay, you can put AI into a tractor and the AI will use the tractor for you to do work. You put AI into a humanoid robot and the AI can wash your dishes and take out your trash. You put AI into an orchestration layer like UiPath has, and the AI can use all of your RPA, all of your automation robots. So that means that UiPath actually has a decade of tools that they've been building that now AI can use, which is like this is such a huge advantage once that clicks for you, that RPA is not being disrupted, but RPA is a huge toolbox that AI can use to help do automations more consistently, faster, with less power usage, lower cost than if you just had an AGI. You know, if you had a brain smarter than a human being, you really want them to copy paste documents between you're going to use all that power for that huge of a brain to copy paste documents from email to a data sheet, a customer data sheet or something? No, of course not. The intelligence, one thing that intelligence does is it allows us to figure out how to do jobs smarter, not harder. Well, an AI that's smarter than a human, it's going to want to do jobs smarter, not harder. And an AGI is going to want to spawn off all these boring, repetitive tasks to RPA bots, which, guess what? Maestro already has a decade of RPA bots in their system to help you automate workflows. Okay, so yeah, that was a huge realization for me, that UiPath Maestro is so good because it's building on top of a decade of tools that they've already built, that now they can just put the AI in, and now the brain can use all these tools still. And you can get full end-to-end workflow automation. Like with ChatGPT, how come you can't automate a full claiming task? Well, ChatGPT, it can't, you know, use your Salesforce software. It can't, you know, read your emails and then jump to your data cloud and then send an email back to the customer about data that it's missing. Like, UiPath allows AI to work within your current structure. It allows whatever AI you want, whether you like Grok better or Gemini better, or an open source model, which by the way are really good from China, and UiPath trains to do specific tasks perfectly. And you can put the AI into your actual business processes, and this is how you unlock value. And people aren't realizing this is where the value unlock is going to come. This is how we're going to automate 25% or 50% of the economy. It's through UiPath. That's what's really exciting. And the reason why they can is because all their RPA bots are 10 times more valuable now that AI can use them instead of humans having to use them. All right, let's let them finish. Or we only have 13 minutes before market close now. Oh no. Okay, well, it's not loading. I recommend you guys watch this video. We can just move on. We don't have that much time left anyway. But like some of the cool things that you can do in this that he shows a little bit later are some of the same things that Lemonade showed in their 2024 Investor Day, where like your claims bot, how it's interacting with customers, for example, you can give text feedback to it so that it starts working more efficiently or answers questions in a nicer way. You can like talk with text to train your bot to get better over time. It's incredible. It's incredible, this software that they made. And all of the compliance and stuff that they already know how to deal with because they have already automated some of the biggest companies in the world. Just like UiPath automates for Uber. UiPath automates for Walmart. UiPath automates for the Navy and the VA. UiPath automates for the Coast Guard. UiPath automates for huge Fortune 500 tech companies. Okay? UiPath already understands the governance, the compliance, the policy aspects that a new startup's not going to know how to do. And they already have all the RPA bots for the AI to use to actually do all the jobs, which startups aren't going to have either. So, I really think like Palantir, because they had Foundry first and they just built AIP on top of Foundry, they really are a decade ahead of people who are just starting from scratch. Well, guess what? UiPath's also a decade ahead of everyone who's starting from scratch. So keep that in mind. And like I said, UiPath can 10x and it will still be 60% cheaper than Palantir on a price to sales basis. Okay. So now I just want to play, I'm going to play this really fast. Hopefully you guys can hear, but the sentiment change, I actually don't think we have time for this. Yeah, I don't think we have, I'm going to try. But I want you to listen to how Lemonade's founder and CEO sounded back in, and by the way, since they're a year ahead, this is actually Q1 2024, how he sounded back in 2024 versus how he sounds today after Maestro exists.
Now, I would like to hand the call over to Daniel.
Thank you, Alex. Good afternoon, everyone. Thanks for joining us. I'd like to start today by addressing the announcements we made this afternoon, and then I'll give a quick summary of our first quarter.
I'm a little afraid this is going to crash the stock, but this isn't the real earnings call, guys. This is from a long time ago.
Before I hand it over to Ashim to go through our financials and guidance in more detail. As you may have seen in our press release this afternoon, Rob Enstein is leaving the company and has also resigned as a member of the board. Rob played a significant role over the last 2 years, and I know I'm speaking for the entire company when I say that we are very grateful for his contribution to UiPath. With Rob leaving the company, I'm excited to step back into the CEO role and look forward to leading us through our next phase of profitable growth and innovation. During the past year, I had the privilege of immersing myself in our product and engineering efforts. This experience gave me invaluable clarity.
By the way, guys, Daniel Dines stepped down from CEO to focus on the new Maestro product as the lead technical officer because he's an engineer. And he hired a guy from Google to run the CEO job. And that guy he really messed a lot of stuff up. And that really hurt UiPath for a period of time. Now, remember, we're listening to something way back in 2024, but I want you to hear how honest Daniel Dines is about how things are going. So that at least we probably won't be able to listen to the last earnings call clip as well, but at least then when you're listening to the current earnings call and he's talking super positively in Q3 of today, like when that happens, you can trust him because you know what he sounded like when things weren't going well. He was being honest about it.
On our path forward. At a time when companies are looking to optimize costs and drive efficiencies without sacrificing innovation, especially around generative AI, our platform enables them to harness the power of AI to achieve actionable outcomes. As we look to the future of automation, our focus isn't just on boosting productivity and efficiency, it's also about redefining what's possible with the breadth of our AI-powered platform of capabilities. The impact that the combination of generative AI and automation provides our customers is significant, and it's expanding. From our early customers like SMBC and Orange to customers that have grown and expanding significantly over the last year, like USDA and ACA, They continue to emphasize how the combination of automation and AI delivered through our platform is transforming their business and enabling them to thrive in today's environment. We view generative AI as a secular tailwind that will continue to benefit our business and the catalyst for continuing to innovate across our platform to expand our competitive moat. Turning to our first quarter results, ARR grew 21% year over year to $1.508 billion, driven by first quarter net new ARR of $44 million. Excluding the FX headwind of $3 million, net new ARR totaled $47 million. Revenue grew to $335 million, an increase of 16% year over year. Normalizing for the FX headwind of approximately $8 million, revenue grew 18% year over year. While our top-line results were generally in line with our guidance range, we are not satisfied with our performance, and I'd like to give you more color on a few key factors that impact.
Okay, so I just want to point out here, this is, back in 2024, this is literally a quarter with faster growth than the last quarter that we're seeing. And listen to how honest he is, right? We were growing over 20% ARR, right? Like he could be so positive and be like, we're going to keep on doing well. That's not what he said. He was very honest about what was going to happen, and he guided correctly.
Impacted first quarter results. First, while we had a healthy start to the quarter, we saw the pace slow as we progressed through the second half of March and into April. This was primarily due to the impact of a challenging macroeconomic environment that we see persisting with mid-market customers, as well as a change in customer behavior, particularly with large multi-year deals. As a result, several large expansion opportunities closed with a reduced size or pushed out of the quarter. Second, we saw inconsistent execution, which included contract execution challenges on large deals and certain sales compensation changes, which we are working to rectify.
Yeah, by the way, the other CEO greatly reduced the commission that the sales team was getting. So that was one of the first things that Daniel Dines fixed. Incentives need to be set up right.
While customer behavior is often a function of the broader macroeconomic environment, execution is something we can control, and we recognize that we need to improve predictability on large multi-year deals. Third, our growth products such as IDP and test automation are producing positive results. However, there is a need to have a deeper execution strategy to scale these products to reach their full potential. And lastly, the investments we have made to reaccelerate growth have fallen short of our expectations, made us less agile in responding to customer needs, and created short-term pressure on operating margins, all of which we are committed to rectifying. Now, let me address our outlook going forward. Our revised second quarter and fiscal 2025 guidance are not where we expect them to be. That being said, we don't expect the macro environment to improve materially in the near term, and we believe it is prudent to guide assuming variability we saw at the end of the first quarter will continue. It also takes into account the leadership transition, which can create some short-term disruption. As we look to the future, we are laser-focused on enhancing our execution, including improved sales linearity.
Okay, I think that's enough of that earnings call. So that was back in 2024 when Daniel Dines was taking back over as CEO. He was very honest that stuff was going to get worse. They guided for things to get worse. He said we should be prudent about this. So keep that in mind now. As we're about to listen, we're going to have to skip over 2026. It's okay. But as we're about to listen to Daniel Dines in an hour in the Q3 2026 earnings call, listen to how different his tone is and know that because he's a straight shooter who's honest when things are going poorly, that you can trust him, even though he might not, he's a Romanian guy. So he's not always he doesn't get as excited as me. He's not as excitable as me. But listen to the words he's saying, because you can trust the words that he's saying, because he's a straight shooter. So after the last earnings call, listen to what he said on CNBC.
We see a very solid demand. I can think that, since the early days of RPA, I have not seen such a huge interest from customers.
Wow. Since the early days of RPA, he said, I have not seen such interest from customers. This is what he said on CNBC after the Q2 earnings call. That sounds like a completely different take, than we're closing deals at a smaller size than previously, and some deals are getting pushed out of the quarter. Like that's what they were saying before the company's growth started decelerating. Now he's saying we're seeing more demand than we have ever seen. If we had listened to the last earnings call, by the way, in the Q2 one, they were saying they're seeing bigger deal sizes driven by Maestro and AI automation. So the complete opposite thing is happening because their new product is so good. But then even more recently, Daniel, so remember in this call, he said more demand than they have seen since RPA first came on the scene, which by the way, back then they were growing like 80% year over year, almost 100% year over year. I think they actually had 1 year before they went public where they grew 200% in a single year when RPA first came on the scene. And he's saying, we're seeing more demand than we've seen since then. And then more recently, UiPath's official Twitter posted this. And once again, listen to the words he's saying. Know that he's someone you can trust. He was honest when things were going to get worse. So even though he sounds a little deadpan, listen to the actual words he's saying here.
The interest for AI and automation is at its highest level ever. And our customers are really happy with what we are showing them.
Okay, I was a little quiet. Let me see if I can add a filter to this real quick to make it louder. Gain. Yeah, give me a gain. Okay, let's try it with that.
The interest for AI and automation is at its highest level ever. And our customers are really happy with what we are showing them, how we think about orchestrating processes, our Maestro offering, our agentic builder.
Okay, so he went from on CNBC right after earnings saying, we're seeing more demand than we've seen since RPA first came on the scene, to a little bit later, like a month later, or when was this posted here? November 13th. So last month, about 3 weeks ago, saying we are seeing more customer demand than we have ever had. It's at its highest level ever. So the demand increased even from the CNBC interview where he said highest since RPA to a few months later, the demand increased even more. So I am expecting a really good earnings, but the market is closed now. So the time has come, everyone. So just so you know, this was their guidance last quarter. They were guiding for 390 million to 395 million of revenue. And annualized reoccurring revenue, they were guiding for 177 to 177.6 billion. And for a non-GAAP operating income of 70 million. And then this was their full year guidance as well. So we'll look at this and compare it when the new earnings drops. But yeah, I'll be here. I'm refreshing this, but I'm guessing we will see a change on our stock tracker here when, now we're here in after hours. When it actually drops, we should see that change. But I'm actually going to invite my brother on here for a second to go over this earnings call with me. Oh my gosh, I reset my computer. I don't even have Discord. I don't even have Discord installed. Okay, Aaron, I apologize. I completely forgot about that. Okay, I think I can probably get on Discord actually from online if I can remember my sign in, because I would like to have him join in if I can. If you guys don't know, by the way, let me shout out a few things. Make sure that if you enjoy my commentary, by the way, you follow me here on X. But if you enjoy video content, all of our video content gets uploaded to howtoinvest_JB on X. So if you want to, so this is my brother, Aaron. He records a lot of videos. He's my analyst. He actually makes all of the spreadsheets and stuff. He's the one who, builds the spreadsheets, put the numbers in there. And he makes a lot of content on our YouTube channel. But yeah, if you like watching videos on X, it's here. We need to add the YouTube link there. But then if you like watching stuff on YouTube, then our YouTube channel is at howtoinvestjb. You can see we're live with 222 people watching. And wow, we have 4.4 thousand people watching live on X. So yeah, subscribe to us here. And my brother Aaron, he makes a lot of like really great content for you guys. He's becoming a great analyst. Like you see top 5 stocks he's buying in 2026, covering Lemonade, covering Shift 4, a lot of stocks we really like. And then you can see content from me as well, where I just talk about my investing philosophy and stuff. So yeah, subscribe to us on YouTube. Follow us on How to Invest JB. By the way, when we hit 1,000 followers here, my whole team is getting a $50 a week raise. So, you know, if you want to help them, then follow them on How to Invest JB. But okay, let me see if I can get logged in here for my brother to hop on for a minute with us. Should just take 1 second if I can learn how to actually log in. Scan QR code. Here we go. All right, sweet. I am in, so I should be able to let Aaron join me here in a second. So far, really no change in stock price, so I don't think earnings have dropped yet. Okay, let's see here.
Hello, can you hear me?
Yeah, can you hear me? Can you hear me, Aaron?
No, you're muted.
Hello? Hello?
Yeah, I can hear you now.
Oh, okay. I think Aaron can hear me now, but now I can't hear him.
Oh no, I can hear
got
you
this
now.
worked
Yeah.
out beforehand. I think I'm going to be able to get this to work here. Output device. Oh my gosh, it's not letting me change the output. Aaron said he was collecting questions from you guys, so it would be nice to get him on here so that I can answer some of the questions you guys have been asking in the chat.
Yeah, I can keep talking. I'm talking. I can hear you now.
Okay, it's not going to let me hear him. All right, Aaron, we're going to have to do this next time. I'm sorry.
Okay, no
I
worries.
did not have it ready. And
Okay.
yeah, without downloading, it's literally not letting me change my voice, my listener off of default, and the default's not set up right. So, if you want to come in here for a second, just into my room for a second to say hi to everyone, that would be good, just so they can see you. All right, the stock is jumping around a lot, but I don't think earnings has dropped yet. 410. Okay, so about 5 minutes.
Yeah, until the drop.
Yeah. Hi, this is Aaron. Everyone here, you want to say hi?
Hello. Yeah.
If talking to here, they probably can't hear you that well.
Hello, everybody.
Yeah. So this is my brother. He makes all the spreadsheets for us. Analyzes. We have a lot of stocks on our spreadsheet, and understanding what the current EV to look through earnings is for all the stocks that I'm interested in is really important to me. So just having that in a spreadsheet so I can quickly look at it based off stock price changes, and then also knowing what our forward expected return is over the next 5 years and 10 years is really important. Is there any question? What's the most important question that we got?
Yeah, there's been a couple. One about day trading, UiPath, if it goes up a bunch, investing in Lemonade, but that's short-term thinking.
Yeah, I don't do any options, guys. I don't do anything short term. Everything I do is for long-term expected returns.
Prediction for path. This is the one serious. Do you think the results will be higher than expected? Can we already expect an increase in sales thanks to Maestro?
Yeah, I think so. So the company is not guiding. So by the way, the question was, do I think they're going to beat earnings, which we find out in 3 minutes. So it doesn't even matter what I say. Reality is going to hit us in the face. But yeah, I think they're going to beat. They beat the last 4 quarters in a row. They're seeing a ton of momentum. We just went through the momentum signs we've seen since the last earnings call. I played you guys those videos. So yeah, I think they're going to beat. The only thing that could make revenue a little bit lower than it could be would be the government shutdown. If maybe while the government was shut down, they didn't pay their contracts or something like that. but then that would just be pushed to Q4. So it wouldn't change full year guidance, and I don't think the street would care that much. But yeah, I think they'll double beat. And I think they'll raise guidance as well. However, management themselves have said that we will not see meaningful impact from Maestro until next year, which, I mean, we're in December now, so that's like a month away. But I think we'll see some. The reason why there's a bit of a delay, they released the new product this year. The reason there's a little bit of a delay is because it takes time to build these automation processes. You have to run it in pilot, and then you get the full contract after you prove that it works. So that's why there's a little bit of a delay between the product launching and then us actually seeing a huge revenue growth acceleration. But already last quarter, they said there was some impact, just not meaningful. So I'm expecting impact this time as well. All right.
Yeah, they said the majority of the revenue acceleration from Maestro is coming next year, so 2026, fiscal year 2027. So, yeah. I think the only other thing was Boston. Someone named Boston said hi. They met you in Santorini.
Oh, cool. Cool.
Yeah,
nice.
I think that's everything.
Sweet. All right. Well, thanks for joining. Make sure you guys subscribe to the channel so you can watch a lot of his videos. And like I said, don't only follow me on @Jake Browatzke, but also follow us here on How to Invest JB. My team would really appreciate that. And wow, we are now at 5.8 thousand live concurrent viewers on X. See you, Aaron. Thanks for stopping by. Okay. Yeah, the moment is here. You guys are about to see me make millions of dollars or lose millions of dollars. I have almost 1 million shares of UiPath. That means $1 change in UiPath stock is $1 million change in my net worth, which is just crazy to think about. This is absolutely insane. But yeah, it's only showing 0.5% up right now. Should be about 1 minute until the earnings release happens. You know, I'm going to buy some shares real quick. I'm going to buy some more shares. Try to front run it before a huge pop. Potential pop. I just think the upside risk is way higher than the downside risk. So I'm going to join in here. Hopefully get this in before they drop earnings. Oh no, it's going up fast. Probably you guys trying to front run me. Okay, I bought some shares. Oh no, it's up 15.50. No, that was too late. Bye. Okay, I bought some. Okay, we're now. Oh, okay, it just dropped back down to negative, but oh, now it's super positive. Okay, let's refresh here. Let's see what the actual numbers are. It's not showing up for me yet. Not showing up. I'm refreshing, guys. Come on, baby. Still only seeing Q2. It hopped up. It went up. Okay, we're up 2%. Come on. I'm going to go back to overview. I'm going to jump back to financials. Up 3.5%. I think people are just excited. I don't know if it's actually dropped yet. I don't think it's actually dropped. Come on. There we go. Earnings release. Okay. Revenue of $411 million. Okay, remember what they were guiding for. They were guiding for $395 on the high end. So they beat the high end of their guidance. ARR of 1.78, an increase of 11% year over year. Wow, and this was 16% revenue growth, by the way. So we accelerated again. It was a clear acceleration again. So we've now gone 4%, 5%, 13%, 16% revenue growth. ARR of 1.78, I believe, is around the high end of the guidance as well. Actually beats the high end of ARR guidance. 1.78 beats high end of ARR guidance. And the non-GAAP operating income. Wow, GAAP operating income of 13 million. Non-GAAP operating income of 88 million, which once again absolutely destroys their guidance for Non-GAAP. Okay. Now we have to see what guidance is for. Financial outlook. Fourth quarter fiscal UI expects 462 to 467, ARR of 1.8 to 1.84, and non-GAAP income of approximately 140 million. So they're expecting the acceleration to continue. Okay, I think they don't have the presentation dropped yet. But I wanna find this one so that we can see what their full year guidance is for. But we can calculate it obviously based off of their quarterly guidance. But that's a double beat right there, guys. So we're up 7.5% right now in after hours according to this. But we are jumping all around. Okay, looks like the street is happy so far. So that's good. All right, well, let's read through some of this. I am pleased with our third quarter results, delivering annual reoccurring revenue of $1.78 billion, up 11% year over year, a testament to the team's focus, consistent execution, and the momentum we're seeing as customers scale agentic automation across the enterprise, said Daniel Dinez, UiPath's founder and chief executive officer. Enterprises are accelerating their AI and automation strategies, and they're looking for a unified platform rather than standalone tools. Our ability to bring deterministic automation, agentic automation, and orchestration together in one trusted, governed system is a true differentiator. It's delivering meaningful outcomes for customers and positions us well as we close out the year. So 16% year over year revenue growth. Guys, they are already at, just so you know, our model has them growing only 16% all of next year. So they're going to destroy that. I think they're going to destroy our base case, which, by the way, discounting 15% a year on our base case over the next decade, UiPath is worth $53 to $54 today at a 15% discount rate on our 10-year outlook. Now, you can't know what's going to happen over 10 years. The reason that we model out 10 years is not because we think we're going to be right, but because no one else models out 10 years, and I like doing contrarian stuff. And understanding, okay, like if stuff kind of worked out this way, how much should the company be worth? So I think net present value at a 15% discount rate, which is a huge discount rate, by the way, is $53 today. And yeah, they're already in Q3 of this year. They are at what we were modeling out next year's full year revenue growth would be. So yeah, we'll see, but that's pretty good. Let's see if they've released the full like earnings presentation. Like this is what I want. That's the earnings presentation is like the really pretty one, right? That like shows, how UiPath is number one according to Gartner Magic Quadrant, both in ability to execute and completeness of vision. They haven't released that one yet, but we got the numbers and the street really likes it. We're now up 10.5%. So you guys want to know how much I'm up? Let's see. I am currently up $1.79 million. That's crazy. It's my biggest single day gain ever currently. We have to see if it holds. But I think commentary is going to be really bullish during the earnings call. And just so you guys know, the earnings call is supposed to start in about 43 minutes. If you guys are enjoying, by the way, drop a thumbs up, subscribe, follow, all of that. But yeah, wow. I think I'm going to buy more. So you have to understand where we are. We're at a very cheap place. I will probably keep margining into Path until we at least get over $20. But once again, guys, this is not advice. I do not recommend anyone use margin. But I'm going to do that. Yeah. This is going to allow me, I'm going to just jump straight to 1 million shares right now. I think all the kind of risk is gone. By the way, the analysts were expecting revenue growth to slow down from last quarter, and we accelerated further. That's how wrong Wall Street was, by the way. They were just absolutely pathetically incorrect. As analysts normally are with the sort of companies I'm investing in, because they're kind of like sheep. They just do what everyone else does. They don't actually do a lot of fundamental analysis themselves, unfortunately. They're definitely because they're analyzing sometimes dozens of companies, they can't put 400 hours into researching a single stock like I can. So that's part of the big advantage I have. We're up 17% now. Crazy. All right, I'm putting in a $1.5 million buy. We'll see if this goes through. I'm going to have to put it so high. Okay, I might have to. If we get to 20%, I'm going to just have to wait till tomorrow. You know, maybe we get a dip to open or something. Okay, I just bought 91,000 shares though, and then we'll just have to let it, you know, play out after this. So I am now at 1,030,000 shares. I just hit 1 million. That's crazy. So I mean, a dollar move is $1 million move now, and we're up $2 right now in after hours. So, guys, we'll have to see what they say. By the way, we have to see what they say in earnings call. Don't get too excited. You know, it's gonna bounce around a lot, especially in after hours. But you know, we've seen Lemonade go up 30% the last 2 earnings in a row. So UiPath is not as volatile as Lemonade. There's still going to be a lot of probably more selling pressure than Lemonade has, just because it's been bottomed out, you know, for 5 years. And when people barely get a little bit of green light, they're like, let me out. They don't see how the story is changing. So you might get some chances to buy at some decent prices, I hope. I'm trying to talk the stock down a little bit so I can buy a bit more. But yeah, so that's pretty good. Let's see if we got the presentation up yet. No presentation yet. Okay, is there anything else we can look at here in just the paper release? And just so you guys know, I got the webcast here. I don't think, they don't even have it to the music yet because we still do have 41 minutes. Okay, but let's see. Dollar-based net retention, 107%. So this was down 1%. This probably doesn't start going up until Q1 of next year is my guess, but I do think that this starts going up. And by the way, 107% is insane for a net retention rate. That means, you know, every $100 that you have from customers, the next year on average, you're getting $107. But yeah, this probably starts going up next year. Q1, Q2 is my guess. GAAP gross margin, 83%, really solid. Non-GAAP gross margin of 85%. That's insane. GAAP operating income, 13 million, non-GAAP operating income, 88. Net cash flow from operation, 28 million. A lot of this free cash flow is probably just going to go straight into stock buybacks. Unless the stock actually does go up a crap ton. Like if we jumped at $20 or something, maybe they'll start slowing down on the stock buybacks. But honestly, I think that would be a decent price to, you know, keep on buying back shares. You know, at $26, you're trading at an EV to look through earnings of 22. So at $26 is when UiPath is in line with the rest of in line with the S&P 500. So that's another $10 higher before it's in line with the S&P 500. And now putting up a 16% revenue growth number, they're growing faster than the Mag 7, which is trading, 30 times earnings or something like that. They're growing way faster than the overall S&P 500, which they're valued half as expensive as. So there's a lot of room. Cash and cash equivalents. Okay, we delivered a solid third quarter results, exceeding guidance across the board and achieving our first GAAP profitable third quarter ever, which is really exciting. So when a company switches, by the way, from losing money to making money, the market generally de-risks it a ton and starts to think about the upside instead of the downside, right? Because there's no longer a question is this company going to stay a going concern or is it going to go bankrupt? That question goes away when you turn GAAP profitable. So we saw when Palantir turned GAAP profitable, it was big. It was really big. And then there's a lot of fund managers on Wall Street that are literally not even allowed to buy companies that are losing money. So becoming GAAP profitable allows a lot of new money that just, even if they were interested, just couldn't even buy. It allows them to buy. So it's really exciting that they just had their first GAAP profitable third quarter. This is Ashim Gupta, who is UiPath's Chief Operating Officer and Chief Financial Officer. He's a really smart guy, by the way. I've listened to several interviews from him when I was doing my research. The progress we've made in strengthening our operating rhythm and execution is showing up in our results, and we feel well positioned as we head into the end of the year. Let's see, business highlights. Announced new UiPath Platform capabilities at Fusion. UiPath introduced new capabilities in the UiPath Platform for agentic automation and orchestration, including pre-built agentic solutions and orchestration capabilities for specific use cases and industries, new tools for building and testing agents and automations, and an expansion of the platform's built-in security and governance, creating a powerful solution that enables organizations to deploy rapid agentic automation to accelerate their return on investment and time to value, simplifying deployment across all stages of agent building, automation, and orchestration, and workflow automation. So, I mean, Maestro was just a huge level up from UiPath Studio. Integration with Microsoft Azure AI Foundry. UiPath announced an integration with Microsoft Azure, enabling customers to automate end-to-end processes using UiPath agents, interacting with Azure AI Foundry agents and models. So if you don't know, UiPath is building a system you can plug any agent in from any model developer. The use of Model Context Protocol, MCP, extends the native bidirectional integrations with Microsoft 365 Copilot and Microsoft Copilot Studio, allowing UiPath Maestro to deploy and scale end-to-end orchestrated workflows across Microsoft or UiPath agents. This gives process owners and analysts the trust, transparency, and governance needed to deploy AI agents in real-world expertise, enterprise workflows, and realize business value faster. So this was a really big announcement, partnership with Microsoft Azure. And by the way, Microsoft has released some really positive stuff about UiPath. UiPath is their preferred orchestration platform. And Microsoft themselves have released some really exciting articles about some insane efficiency gains that some Azure customers have gotten by using UiPath. And just so you know, Microsoft Power Automate, it sucks if you want to do anything outside of Microsoft. And UiPath Maestro is so complex. It's not like a single thing like Zoom where Microsoft can make a B tier of it and people are just going to switch to it. It's way too complex. There's like a million, not a million, I shouldn't exaggerate. There's probably like 100 to 500 tools like Zoom Video within UiPath's platform that allows you to do the end-to-end orchestration that you need at a huge Fortune 500 company. Okay, announced collaboration with UiPath, with OpenAI. UiPath announced a collaboration with OpenAI to build a ChatGPT connector that integrates OpenAI frontier models with enterprise customer workflows, powered by UiPath Enterprise Orchestration, accelerating time to value and return on investment from their agentic AI efforts. UiPath's best-in-class agentic automation capabilities, OpenAI models, and OpenAI APIs will simplify agent deployment our development and deployment, allowing users to focus on business goals rather than complexities of the underlying infrastructure and enable process owners to build trust in their AI agents. Launched UiPath Conversational Agent with Google's Gemini models. So there was so many big partnerships between last earnings call and this earnings call. Microsoft partnership, OpenAI partnership, Google partnership. Oh, and what we're going to get to next, NVIDIA partnership. And people thought this was going to be a bad quarter. Come on. Launched the conversational agent. So UiPath launched the OpenAI conversational agent with voice interaction enabled by Google's Gemini models, which are very good now, by the way. UiPath customers can now build agentic automation into business processes quickly and seamlessly without the need for complex coding and manual effort. So if you want to communicate with AI through voice, you can through UiPath because of this partnership, or even if you want customers to be able to talk live with your AI agents in a voice mode, you can set up those orchestrations through UiPath. Okay. Announced collaboration with NVIDIA. UiPath announced collaboration with NVIDIA to help enterprise customers fortify their existing automated workflows with AI capabilities in high trust scenarios, such as fraud detection or care management in healthcare. Combining UiPath's agentic automation expertise with open NVIDIA Nemtron models with NVIDIA NIM empowers organizations to quickly and easily deploy the enterprise-ready AI models as microservices, such as natural language processing, image understanding, and predictive analytics, to accelerate agentic AI adoption and automation for those sensitive workflows efficiently, accurately, and at scale. Also, UiPath partnered with Snowflake for agentic-driven data insights. Because remember, UiPath's orchestration, it has to partner with all of the software that customers already use so that the AI agents can go do jobs with all that software like a human would, but now you just don't need the human for it. UiPath announced a partnership with Snowflake, uniting UiPath's platform for agentic automation with Snowflake Cortex AI, empowering businesses to quickly turn data insights into faster and smarter autonomous actions. The combination of UiPath Agentic Automation Platform and Snowflake's Cortex AI agents integrates best-in-class enterprise-grade automation with one of the leading modern data platforms. The integration expands the ability of UiPath Maestro to orchestrate low-code, no-code, and other specialized agents. And remember, give them all of the data that they need to make the right decisions. They have to understand your processes. They have to understand your rules. They have to understand how your company operates. So without that data, they can't do work within your organization. UiPath was named a leader and star performer in the Everest Group Intelligent Process Automation, IPAP, and Full Suite IPAP Peak Matrix Assessment of 2025. UiPath was named a leader and star performer in the Everest Group Intelligent Process Automation Platform, recognized for market impact, product vision, and capability. And I don't always agree with some of these assessments, but it's good if you're winning them all. Like, that's not bad, right? UiPath positioned as a leader in the Gartner inaugural Magic Quadrant for intelligent document processing. UiPath was positioned as a leader, which is the highest, for capability and vision to get into that final leader square. I guess since I'm mirrored, it would be this side. They were also recognized as a leader in the Gartner for AI augmented software testing tools. The Maestro platform was named in Times Magazine Best Inventions of 2025. An annual list recognizing the world's most groundbreaking inventions, making a difference and redefining how we live. They launched an automation cloud in the United Arab Emirates, which is a cool place, by the way. If you guys have never visited Dubai, I recommend it. It's a cool city. Plus 0 income taxes. Come on, the US, we need to fix this. Why do we have income taxes here? It's not right. We don't need it anymore. You have tariffs, but I digress. Okay, UiPath announced an integration with Microsoft Azure. This new cloud-based enterprise software as a service solution enables private and public sector organizations in the UAE to strategically position their infrastructure, applications, and data while complying with local data residency regulations as they scale up agentic AI adoption. So I think one of UiPath's big advantages is the fact that, Palantir only wants to help the West, which I understand. I totally understand that. UiPath wants to help everyone be more efficient. UiPath wants to help everyone's quality of life improve. So UiPath is totally fine, doing orchestration for Saudi Arabia or for the UAE, or for even probably China. So that just, they have a bigger total addressable market than Palantir does. And there's a lot of markets where they're not going to have to compete against Palantir at all. So just keep that in mind. Whether or not you agree or not, as an investor, it's probably good. They're not going to help enemies' militaries or something. Like they help the Navy, like UiPath helps the Navy and the Coast Guard and that sort of thing. Achieved ISO 42001 certification for AI adoption and deployment. I'm not sure what this is. The world's first international standard for artificial intelligence management systems, AIMS, governing how AI technologies are designed, developed, deployed, and continuously improved, reinforcing the built-in governance in the platform to safeguard data, reduce risk, and help organizations adopt and scale agentic automation. Announced UiPath as a founding contributor to AIUC1, joining in promoting security standards. All right, cool. And yeah, the earnings call is going to be at 5 p.m., which is now only 28 minutes away. So we are getting very, very close. Okay, let's see if they uploaded the actual presentation yet. Okay, we're still waiting on the presentation. But let's see what you guys are saying. I would love to answer some of your questions here. Wow, we have 10,000 people watching live. That is insane. How do I get to the chat, though? Where's the chat at? UiPath, oh, here we go, chat. Okay, well, if you guys want to talk in this chat, go ahead. I think there's a chat for YouTube as well. Only 306 people watching on YouTube. YouTube is falling off. What are you doing, YouTube? Why are you falling off so much? As far as like the platform, I think X might eventually beat YouTube for videos because YouTube has been just like deleting channels with AI and stuff without any human review, which is crazy. Make sure you drop a like, by the way, on YouTube if you are watching here. We're at 70 likes now. Okay, let's see if you guys have any questions. That's why I'm in Path. They help everyone. Yeah, I think it's great to help everyone, right? Like if you're a third world country, I think you cannot want their immigrants to come into the US, but still want to help them in their country be more efficient, right? Like that makes sense to me. The stock should rally hard. Don't be surprised if it hits 25 by Q4 earnings. I mean, yeah, it could fly way past that. Who knows? No, those are just technicals. Okay. Doesn't look like there's any big questions there. Let's see if anyone's typing. Still no chat. I don't know if anyone else even knows how to get to chat on X as well, or either. Oh, those. But let me go through some of my posts here while we wait. We're counting down to the earnings call now. It's coming up. If you guys want to retweet this, by the way, I would really appreciate that. So this is one reason I was getting quite bullish on Path. I'm not a big technicals guy, right? I look at fundamentals. I buy stocks that I think fundamentally have the highest returns based off of my discounted cash flow models that go out 5 and 10 years. And I know how expensive a stock is based on the EV to look through earnings, which if you guys want to know about, go like learn all of that. I talked about it at the beginning of this. I walked through it all. But this is Path's volume. So you can see when they IPO'd and we're way up at $85, you know, the daily volume wasn't that high and it was just selling off. Now the volume has slowly been increasing over time and the stock has been bottomed for 3.5 years where every time it tries to drop below 13 or 10, buyers just come in and it just starts recovering. And that's part of the reason why it feels so safe to own this stock, right? Because I know that there's buyers that come in. I mean, UiPath themselves have bought back $1 billion of their own shares because they're so free cash flow positive already. But then look at this freaking spike. This was when they announced, this was spike in volume when they announced the partnership with OpenAI, NVIDIA, Salesforce, Snowflake, Google. It caused this huge spike here. And then we've been selling off for no reason, like literally just because the overall market sold off. So I was like, okay, this is time for me to margin in as much as I can. And I know I could be wrong. And I had a strategy for that, but it's, you know, turning out I'm right. And we're seeing this volume increase. And the longer the base, guys, the longer the base, normally the bigger the breakout is. Because the whole time, right? The whole time that the stock is selling off the last 5 years, if we go over to macro trends, now macro trends is not going to have the most recent quarter yet, but let's do macro trends Path. My nose is running. It's cold, wintertime. If we look at macro trends UiPath, their revenue over this period of time. So this is back 2021, right? When the stock went public. They had 68 million of trailing 12 month, or 680 million of trailing 12-month revenue. Today, they have grown to 1.5 billion. Remember this last, let me refresh this real quick. Okay. Remember they just put up an ARR now, their annual reoccurring revenue, which they have revenue on top of that, but is almost 1.8 billion of ARR now. So the whole time that the stock is going down, right? We fell 80% over this period and the revenue went up. What is that? 6, 12, 18. 3x. So the revenue has tripled while the stock has pulled back 80%. That, my friends, is divergence between fundamental value and price. And that is what unlocks opportunity. When a stock is broken and a company is not broken, that is where opportunity comes from. So yeah, we've had a tripling in revenue. And by the way, you can see they were at 4.6. It was where they bottomed. Stuff was not going well. See, Daniel Dines had to come back, leave the being in charge of making the Maestro product, come back as the CEO and turn the company around. They fell from 31% revenue growth to 15 to 10 to 8.9 to 4.6. This is not the time I would have been buying. But then guess what? 6.5. And then last quarter, 14.5. I was like, wait, this is turning around again. And then I saw the Maestro demo. I was like, wait, this is going to be big. And now we just saw the last quarter. They just put it up, right? 16% now. So the acceleration has continued. It's even faster they're even growing faster year over year now than they were growing last quarter. And who knows what they're going to be able to accelerate to. I had them at 16% all of next year in my model. I'm going to have to rebuild it. I'll let you guys know what my new price target is after I rebuild the model based off of this new data that we have, that they're already at 16 this year. It didn't take them to get to next year. So I have them getting to 30% revenue growth 5 years from now. They could get to 30% revenue growth by mid next year. Who knows? But they're definitely accelerating. So we're headed in the right direction. And yeah, that divergence is opportunity. And then you see all this volume coming in and you just know, okay, people who want to sell, they're selling. There's a new shareholder base coming in here that's really excited. And this new shareholder base, this amount of volume, the stock can only stay here for so long. And then we have to go up a lot. So bigger the longer the base, the bigger the breakout. It's an important thing to think about. You don't want to catch a falling knife kind of while it's crashing. You would let it crash, let it bottom out a bit. A lot of stocks do this. Okay, yeah, so this was today. So now I've added, I'm now up to 1 million. I guess I could post a screenshot of my new thing, but earnings call starting in 20 minutes. So I'll do it after the call. But yeah, every single day I've been buying shares. So this is now more recently. You can see I was at 13 million, 12 million cost basis, 900,000 shares. Now I'm at over 1 million shares here. I'm not sure what my average price is now. It's definitely gone up a little bit, right? Because I just bought some shares at $16, $17. And actually, I'm going to buy a bit more before the earnings call starts. I need to not tell you guys what I'm going to do because you guys always freaking buy it up before I can. But it looks like this might be around the lowest it's going to fall in the post market right now. We still don't know what tomorrow will bring, but I'm guessing the commentary is going to be really bullish. Okay, good. You guys didn't front run me this time. I'm just going to do like another $300,000 buy. Oh, now you guys are front running me. The freaking delay in the stream. Okay, there we go. I made the buy. Okay, that'll be good. Cool. Is there anything of value I shared recently? Am I just, posting terrible stuff? Oh yeah, I showed this earlier, but this is important. So one of the reasons why I think that UiPath has such a good chance of winning agentic automation is because how much they destroyed the deterministic automation market, where AI multiple was kind of predicting that they estimated that UiPath had 57% of the deterministic automation market. I think this might be a little bit too high of an estimation, but they definitely had the biggest market share. I know that for sure. They're definitely the number one player. I know that for sure. And they have the highest review scores. Like Pega and all of them is so terrible compared to UiPath. Like Pega Blueprint is garbage. I watched the demo and I was like, this is what they built? Come on, guys. So yeah, this is part of the reason why I think UiPath has such a big chance of winning agentic automation, because they won deterministic automation. And then the agentic automation market, it's going to be like 100 times bigger than the deterministic automation market. So they're going after a way bigger prize now. All right, let's see if the earnings call convert to local time. It's not it's not coming up yet. We're still 18 minutes away, so maybe in like 10 minutes this will pop up. All right. Anything else of value here that I share today? More buys. I've been buying every single day. Oh, by the way, fun strat. Tom Lee, if you're a fan of Tom Lee actually owns Path in his GRNJ, his new small and mid cap ETF. They have Path as a granny shot, by the way, if you're a fan of Tom Lee, not the drummer, Thomas Lee. Okay, let's talk about the TAM for a second, because I think a lot of people are going to think I'm crazy about the TAM. But I said Path's total addressable market is $25 trillion today. Lemonade's total addressable market is around $8 trillion today. That's the size of the insurance market. Both of these companies can still 100x to 1000x. And the way that I'm kind of getting to this number is because the total annualized salary, and this is this estimate, guys, we don't actually know for certain, but the estimated total salary that all of humanity earns per year is about 100 trillion US dollars. So I'm kind of thinking, Path can probably automate like close to 50% of all the work that gets done. Definitely all the digital work. Like 90% of all the digital work that gets done, UiPath can automate. So if they can automate, 50 trillion or 40 trillion, the economy is going to be growing very fast as well. So 10 years from now, the whole economy, this is going to be like 150 trillion, 200 trillion. Who knows how fast the economy is going to grow? But just looking at the TAM today, if UiPath can potentially automate half of that, they'll probably charge like half as much, at least half as much today. Eventually that will get competed even lower. But let's say today they charge you half as much as you would have to pay an employee. That means it's 25 trillion. If they can automate 50% of the economy, that's about 25 trillion of salary that they could potentially take that their bots would be earning, and companies would be saving 50% on this work, and it would get done faster. It will get done more consistently. There'll be no policy or compliance violations. It will just take away so much headache. It will take away management cost as well. I think they're truly competing for a $25 trillion market right now, and it's a $7 billion company. So yeah, keep that in mind. It's part of the reason why I felt, confident moving a lot of Lemonade into Path. Not because Lemonade can't 1000x. Like Lemonade's definitely still going to 100x at least. 100x would make them a $600 billion company. I think that's kind of in the bag. I know I'm crazy, but I think Lemonade's probably going to get to at least 600 billion. I think, reasonably they'll probably be the first $1 trillion insurance company, even having to compete against all the other insurance companies that are using Path. But Path is going to be doing, 50% of the work for all of Lemonade's competition. If they can take 57% of that market, Path might make more money in insurance than Lemonade does. Like that's what's crazy. So when they're around the same market cap, the bigger TAM for Path is what made me say, okay, this is even a bigger opportunity, which is crazy because I already have a 200x opportunity I own, but I'm gonna pay 30% taxes on these gains because I'm moving into a stock that's I think is gonna do 100% better over the next 5 years in our model. So the math on that shows even if you take a 30% instant hit, so now you have 70% doubling. Well, 70 doubling turns into 140. Whereas 100 going up 50% is, 714, 70 doubling is 140. Whereas as 100 going up 50% is 150. Wait, I'm doing the math wrong. It made it. Also, we're going to get this upside before I have to actually pay taxes next year as well. But wait, let's go into the calculator real quick. Okay, $100 times 2.1, which is about the outperformance, is 210. But it's not that, right? Because I have to pay 30% taxes. So it's 70%. Okay, but it's not actually that much, right? But because I'm only paying for the gains. I'm paying 30% on the gains, not 30% on the full amount. So it's actually about 15% of the total amount I'm selling is going to taxes. Okay, that makes the math work. I know I did this math and it worked out. Okay, 80 times 2 is 170 rather than having 100% of your funds times 1.5, which is only 150. And the TAM's much bigger. It's even more of an outperformance over 10 years. But it's a risk, right? I am taking a risk. Everything in life is a risk. You leave your house, it's a risk. So you have to have the confidence. Okay, we're 13 minutes away from earnings. Let's see if, okay, well, they're making me register again. Let me move this over to the other screen. Don't want to show you guys my login info. Okay, we are here now. Or my email and stuff. I don't want to dox myself. Okay. I am just mute it for you and listen myself, so that I don't get copyright claimed on YouTube, which will steal 100% of the monetization because YouTube is silly. But I'm listening, so I will be able to switch back over here as soon as the call starts in about 12 minutes. How much money do you have? Back in 2019, I only had $20,000 that I saved over 7 years. And now it's a lot more than that. I mean, let's see how much I'm up. We're not up as much as we were at the peak, but we're probably not at the peak yet. I'm up $1.8 million so far today, which is crazy. And I can still, make mistakes. That's why I have to spend hundreds of hours researching this stuff. Okay, I said this earlier in the stream, but there's now a lot more people watching. We're at 10,800. Path can 10x in value and will still be trading at a 60% discount to Palantir's price to sales ratio. Did you guys hear that? Path can 10x in value and will still be trading at a 60% discount. Now, Path is growing only 16% right now, but it's ramping up, right? Over the last 3 quarters, we've gone from 4.5% to now 16%. So the ramp has been great over the last three quarters. But Palantir is still going quite a lot faster. I think Palantir is at like 65% growth or something. So Path shouldn't be at the same valuation of Palantir yet, but it also shouldn't be trading like a stock with 0% revenue growth, which it is trading at right now. Like literally you will beat the risk-free rate of return buying government debt, owning Path, if Path had 0% revenue growth forever. And it's not going to be like that. Okay. So it's criminally undervalued. But yeah, I made some thoughts comparing Path and Palantir if you guys are interested in that. 10 minutes now, guys. 10 minutes. Oh yeah. So this is the current sentiment, by the way. For those of you guys who are curious, the Motley Fool uploaded this article yesterday that was just blowing my mind. They said UiPath is dominating robotic process automation, which is true. Its tools can help businesses streamline their operations and cut costs, but it could face tough competition from newer generative AI platforms. Yeah. Too bad Maestro is the newer generative AI platform that is now the best in my opinion. UiPath did not fall into the innovator's dilemma. They actually created the innovation because it's still founder led, which is what you need to do that. And then as I explained earlier, it doesn't actually obsolete RPA. RPA is a huge toolbox. Deterministic automation is a huge toolbox that AI can harness, can use. It makes your AI far more effective, which is why UiPath is now so far ahead of everyone else, because their AI bots are empowered with deterministic automation that can do processes in your Salesforce, on Gmail, in your documents, all of that. And then they said, fresh competition from generative AI platforms like OpenAI's ChatGPT. Okay, come on. You don't even understand how this company works. ChatGPT is an agent that you can put inside your Maestro orchestration. ChatGPT, that chatbot, is not going to automate a Fortune 500 company's claims workflow, okay? It just doesn't make sense. They just aren't using logic. These people are writing articles after doing 3 minutes of freaking work. And it's probably AI doing it. And AI is giving you answers based off of all the previous writing, which is only about RPA. So AI doesn't Yeah, AI is leading people astray because it doesn't have all the new information. Sorry, I shouldn't get frustrated. My stock is up 10%. It just, when the stock is so misunderstood and you understand it better than the market, it's really frustrating reading what analysts are putting out. Okay. 8 minutes, guys. 8 minutes. Okay, yeah, these were the expectations. So 14 cents a share. I'm actually not sure what the per share is. Let's see. Path earnings beat. I did not spell earnings right. 1 day ago, 2 days ago. Is there some news we can see? 13 minutes ago. I just want to see the percentage of beat. Oh, thanks for providing 0 value. Okay, this is just reposting. Is there no good journalism? So this is the other thing. When a stock's down 80%, no one's covering it. No one's paying attention to it. There's a great quote from Peter Lynch where he was talking about this stock that he found that he did really, really well on. And in this speech, I think the speech is from 1997, but you can watch it. Just search Peter Lynch speech. You can find it, 1997. He was like 100 out of 100 analysts that looked at this stock would want to buy it. They would see the value. He's like, but the problem is no one was looking at it. And it's like, that's the sort of market we live in. And people think it's efficient. Listening to the earnings calls, because like I've been listening to earnings calls from Path for the last 2.5 years, even though I just started buying it really heavily over the last 3 months. But I've listened to all the earnings calls, and because the stock was down 80%, every single analyst that used to call in, I don't think it's going to be like that today. I think where the actual analysts are going to show up this time. But every single earnings call I was listening to, they were like, blah, blah, blah from JP Morgan. And then it's like, hi, I'm this guy in for the actual analyst who's supposed to be covering you. I'm just an intern, and they have me here to do practice because they don't care about your stock. They don't actually say that, right? They just say, I'm in here for blah, blah, blah. Here's my question. Normally they're very novice questions because I don't think that Wall Street thinks long-term. So they don't ask long-term questions. They're just thinking about stuff in the wrong way, in my opinion. But then the interns asking the questions, they're now inexperienced. So they're asking inexperienced short-term questions. It's not even like good short-term questions oftentimes. So this is what happens. You're getting a price target from an analyst who's not even listening to the earnings calls. He's like, okay, intern, what do you think of the earnings call? And the intern's like, okay, this is what I thought. And the analyst is like, okay, yeah, I'm just going to keep my price target at the same level that all the other analysts' price targets are to be safe. And that's literally what happens, which is why analyst price targets are a trailing metric. They always follow the actual price. They do not lead the price. However, you start to get good analysts actually following and actually paying attention after the stock starts going up. So that's why you have to do your own research in order to find these opportunities. Oh, and by the way, part of the reason why I was pretty confident they were going to double beat today, which they did, is because over the last 4 quarters, I think over the last 8 quarters, they've double beat. Maybe they had 1 quarter where they missed one of the metrics, but they pretty much always beat because they guide pretty conservatively. Oh yeah, and the other reason I was pretty confident they were going to beat is because last quarter, not only did they destroy analyst expectations in Q2, but they also raised guidance for Q3 and full year by more than they beat by. So they beat the expectations and then they raised guidance by an even bigger amount than they beat, which shows that momentum, they see momentum accelerating. And then they came out with a bunch of videos and stuff in between saying they were seeing more customer demand than they've ever seen before. So I was like, okay, yeah, they're probably going to double beat. That would make sense. And analysts were expecting revenue growth to slow down this quarter, which doesn't make sense. So it accelerated another 3%. We went from 13% or 14% revenue growth to 16% revenue growth year over year. So yeah, that's a lot of ranting. 4 minutes, guys. We're almost to earnings call time. We'll see what happens. I think it's going to be pretty bullish commentary. Oh yeah, I recommend watching this video. Paperbag Invest. He's been making videos on Lemonade for many, many years. I highly recommend following him. He's an incredible analyst. He has some really great modeling done on Lemonade. But he just uploaded his first ever video about UiPath yesterday. So I highly recommend checking this out. I think at the end, his margin expectations are way too low because he's used to, analyzing an insurance company, which insurance companies have very low margins because they have like 60-70% loss ratios, having to pay out claims on revenue. Like 60-70% of the revenue they collect, they have to pay in claims. So he's used to companies with a lot lower margins. So his margin expectations were way too low at the end. But besides that, this was a really good video. And because he's just learning about the stock, I think learning from someone who's just ahead of where you are is sometimes the very best way to learn about a company. So I highly recommend this video from Paper Bag Invest and following Paper Bag Invest on X as well. Oh yeah. Oh, just talking about sentiment being super wrong and people having no idea what they're talking about. This post with 1.7 thousand likes is saying that UiPath is competing against Tesla and NVIDIA in humanoid robots, that's not what they do. Maybe they will expand into humanoid robots eventually. That's a possibility. But right now they do not do humanoid robots. And then people in the comments are like, Tesla will just do all of this. Tesla's going to beat UiPath and humanoids. People just don't know. So that's kind of the stage of the market where we're at. And I love it when my knowledge of a company is much higher than what I see the average person's knowledge of a company is, because that means I have alpha. Whereas, Lemonade, I still think I know a lot more about Lemonade than most people. But since the stock has gone from 11 to 70, the market sees things a lot more similarly to how I do now. So I found a stock where the market does not see things similar to me at all, so that I can be far more contrarian. Oh yeah, these are my annualized returns. People will say this is fake, but this is going to be even a lot higher now. But this is just from 2023 to now 2025. So it's about 2023, 2024, 2025. It's almost 3 years. I have averaged 239% annualized returns using no options. I do not use options. I do not like options. I think options are a terrible way to invest. If you want leverage, use margin, but it's very risky. Like buying a stock like Path, you will never zero out if you don't use leverage or margin or options. You can never zero out. The stock has no debt. It can't go bankrupt. Okay. Like many things would have to change. You would have a long time to realize that things were not going to be as positive as I think right now. You're not going to lose all your money. But using leverage, using options, you can easily lose all of your money. However, losing options, especially if you're buying super far out of the money call options, which I think on Path, you guys are going to do fine. Just being completely honest, because I think Path's going to go up a lot. So if you have options, I'm not trying to scare you. I'm just, showing my reasoning. I think you guys with like leaps out to 2027 or 8, I think you guys are going to make a lot of money. But just know the chance of zeroing out on an option is very high. So you can never have as asymmetrical as a play unless you're buying like not far out of the money options. It can be a bit more asymmetrical, but buying shares, especially a stock that will get you positive returns better than your interest, if there's zero growth because it's so cheap, it's so asymmetrical. The amount of upside, because it can 100x or 1000x or more compared to the amount of downside, it makes the investment so safe. But the earnings call is starting. Let's get in.
At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during this conference, please press *0 on your telephone keypad. Please note that this call is being recorded. I will now turn the conference over to your host, Elise Furlani, Vice President of Investor Relations. Thank you. You may begin.
Good afternoon, and thank you for joining us today to review UiPath's third quarter fiscal 2026 financial results, which we announced in our earnings press release issued after the close of the market today. On the call with me are Daniel Dines, Founder and Chief Executive Officer, and Ashim Gupta, Chief Operating and Financial Officer, to deliver our prepared comments and answer questions. Our earnings press release and financial supplemental materials are posted on the UiPath Investor Relations website. These materials include GAAP to non-GAAP reconciliations. We will be discussing non-GAAP metrics on today's call. This afternoon's call includes forward-looking statements regarding our financial guidance for the fourth quarter, fiscal year 2026, and our ability to drive and accelerate future growth and operational efficiency and grow our platform, product offerings, and market opportunity. Actual results may differ materially from those expressed in the forward-looking statements due to many factors, and therefore investors should not place undue reliance on these statements. For a discussion of the material risks and uncertainties that could affect our actual results, please refer to our annual report on Form 10-K for the year ended January 31st, 2025, and our subsequent reports filed with the SEC. Forward-looking statements made on this call reflect our views as of today. We undertake no obligation to update them. I would like to highlight that this webcast is being accompanied by slides. We will post the slides and a copy of our prepared comments to our investor relations website immediately following the conclusion of this call. In addition, please note that all comparisons are year over year unless otherwise indicated. Now, I would like to hand the call over to Daniel.
Thank you, Alice. Good afternoon, everyone. Thanks for joining us. We are pleased with our performance in the quarter, which was driven by team's focus, consistent execution, and progress across our strategic priorities. Our automation strategy, combining the reliability of deterministic automation with the intelligence and adaptability of agentic AI, continues to align with what customers want most: trusted enterprise-grade automation that delivers tangible ROI fast. We've always believed that our approach to automation, agents, and orchestration creates a durable competitive edge. This quarter's results reinforce the value of our platform and the improved execution from our teams. We beat the high end of our guidance across all metrics, delivering third quarter ARR of $1.782 billion, up 11%, further reinforcing my conviction that our business is stabilizing and being driven by $59 million in net new ARR. Revenue was $411 million, an increase of 16%. Our disciplined approach to operational efficiency continues to strengthen profitability, resulting in our first GAAP profitable third quarter, while increasing non-GAAP operating income to $88 million, or a 21% margin. And we are on track to be GAAP profitable for the full year 2026 for the first time. The momentum we're seeing in the market isn't just in our results. It's in how customers and partners are engaging with UiPath. You could see that momentum in action at Fusion, where thousands of customers, partners, and developers joined us in Las Vegas to see how agentic AI is delivering measurable ROI today. We showcased advancements across the UiPath platform, including new integrations with partners like OpenAI, Microsoft, NVIDIA, Google, and Snowflake, and real customer stories where we had leading enterprises across key verticals sharing how they are transforming mission-critical processes with agentic automation. Customers tell us they get the most impact from a unified platform bringing together deterministic automation, agentic intelligence, and process orchestration. And we are seeing that play out as enterprises move quickly from pilots to production. Over 950 companies are developing agents, and there have been more than 365,000 processes orchestrated with Maestro across our platform. A powerful example is one of the world's largest investment management firms, which chose UiPath for Maestro's vendor-agnostic architecture and ability to connect systems. They've already demonstrated measurable impact through multiple agentic POCs, integrating with ServiceNow, Confluence, and specialized LLMs to orchestrate end-to-end workflows and delivering a 95% reduction in time to value and tens of millions in projected savings. With more than 260 automations, they expanded this quarter to increase their adoption of agentic automation, and together with Ashling, has identified over 40 high-value use cases expected to generate more than $200 million in savings over the next 3 years. These stories demonstrate how our innovation is meeting customers where they are and helping them scale. And it's that customer energy that inspired many of the new capabilities we announced at Fusion. One of the most exciting is UiPath Screenplay, where we are combining traditional RPA with the power of LLMs to build more reliable automations. Screenplay understands intent, builds multi-step plans, and executes them autonomously, giving developers and business users a faster way to automate complex UI tasks. Our Screenplay technology is one of the best positioned in the computer use benchmark World OS. We are also helping customers move from pilot to production faster through continued enhancement to Agent Builder, including a new visual canvas for debugging and optimization, and reusable templates that make automation easier to scale. That focus on usability is driving real customer success. A great example is USI Insurance Services, which selected UiPath because of our multi-agent orchestration capabilities. Working with Lidonia, they are automating a complex workflow where UiPath agents and robots process incoming requests and generate outputs, all orchestrated by Maestro. USI expects over $32 million in savings over the next 3 years. As more customers scale their agentic automation programs, we're expanding what agents can do, especially in document-heavy processes. This quarter, we introduced agentic capabilities to our Intelligent Extraction and Processing, our IXP product, which delivers specialized extraction and validation agents that handle complex, non-deterministic scenarios and reduce manual review. And with UiPath Autopilot for IXP, customers can automatically generate document templates, saving hours of setup time per project. A great example is Corewell Health, which plans to leverage IXP to automate the processing of referral information into Epic. In addition to improving efficiency and accuracy, they are on track to redirect $1.5 million of labor saving this year and expect over $3 million next year. Stories like this show how our innovation is helping customers turn manual, document-heavy work into intelligent, automated processes. And these strong results continue to earn us third-party recognition. We were named a leader in the inaugural Gartner Magic Quadrant for Intelligent Document Processing, which we believe highlights our capabilities for data and information extraction to help enterprises unlock value from their documents in the age of AI and agentic automation. We are also recently recognized as a leader in the Gartner Magic Quadrant for AI augmented software testing tools, which in our view validates our vision for agentic testing and the results our customers achieved with UiPath Test Cloud. One example is NRG Energy, which adopted UiPath Test Cloud to address testing challenges across SAP and its digital apps. With agentic testing and autonomous self-healing, they expect 30% better coverage, 1.5 times faster cycles, and almost $2.9 million in savings over 3 years. And lastly, we are proud to be recognized by Everest Group as both a leader and a star performer in the 2025 Intelligent Process Automation Platform and Full Suite IPAP Peak Metrics Assessment. This recognition underscores the strength of our end-to-end platform, our innovation in agentic automation and AI integration, and the tangible business impact we are delivering for customers. These recognitions highlight the strength of our unified platform, which connects every layer of automation from discovery to orchestration within a single governed system. They also reinforce what we hear directly from customers. The power of our platform comes from how it works together. And at the center of that platform is Maestro, our orchestration engine. Maestro goes beyond managing automations. It serves as the control plane for how work is orchestrated across the enterprise, powering true end-to-end automation at scale. A powerful example is the leading US managed care provider that is leveraging UiPath agents, robots, and Maestro to tackle a backlog of more than 140,000 provider appeals. They automated the entire workflow using agents to classify forms, robots to handle processing, and Maestro to orchestrate the process. The result is a streamlined operation targeting 80% autonomy in year one. As Maestro becomes more deeply embedded in customer operations, we are continuing to enhance its capabilities with new features like case management and process apps. Case management helps customers model and manage long-running processes, while process apps enable customers to build tailored end-user experiences with real-time visibility and actionable insights to drive proactive operational improvement. In order to realize the value of agentic, customers need a strong foundation in deterministic, and this quarter, we announced the general availability of API workflows, which delivers API-centric automations that complement RPA and agents. We believe this strengthens our position as one of the industry's most comprehensive automation platforms. We are continuing to expand our cloud footprint in important markets like Switzerland. And at GITEX, we announced the launch of Automation Cloud in the UAE. This expansion gives customers the ability to run automations, AI agents, and orchestration in a secure, locally hosted environment that meets regional data residency and governance requirements. The power of our platform really comes to life when it's applied to industry-specific challenges. We are focused on building vertical solutions that help customers accelerate outcomes and ROI. The capabilities we gained through our Peak acquisition earlier this year are extending these vertical capabilities. By combining their industry-leading pricing and inventory optimization technology with Maestro and our broader platform capabilities, we've created an agentic merchandising, pricing, and inventory solution with the Debenhams Group. We are taking this joint agentic solution to market with other leading retailers and manufacturers, expanding the reach of our platform across key verticals. These industry solutions are just one way we are helping customers realize faster value. We're also enabling them through deep collaborations with global technology leaders. At Fusion, this collaboration came to life through new integrations, including with Microsoft Azure AI Foundry, enabling UiPath agents to work seamlessly with Azure agents and models. Using Model Context Protocol, UiPath expands integrations with Microsoft Copilot and empowers organizations with the trust and governance needed to run AI agents at scale. We announced a collaboration with OpenAI to deliver a ChatGPT connector, bringing OpenAI's frontier models directly into enterprise workflows, simplifying AI agent development and accelerating time to value. We also launched a new conversational agent with Google's Gemini models, enabling natural voice-driven automation without complex coding. Additionally, we introduced a new integration with NVIDIA, allowing organizations to enhance high-trust workflows like fraud detection and healthcare with AI models deployed through NVIDIA NIM microservices. And finally, we partner with Snowflake to combine agentic automation with Snowflake Cortex AI, helping businesses turn data insights into fast, autonomous action. While our technology partnerships expand what's possible with our platform, our go-to-market partners make that innovation real for customers. During the quarter, we expanded our collaboration with Deloitte to help organizations accelerate how they build, test, and release software. By combining the agentic testing capabilities of UiPath Test Cloud with Deloitte Ascend, we are transforming the testing lifecycle with agentic AI to automate repetitive tasks, detect changes, and execute tests autonomously. And with Autopilot for testers and Agent Builder embedded in Ascend, Deloitte teams can leverage over 1,500 pre-built testing bots and AI agents. Lastly, we are encouraged by our federal sector performance this quarter, where efficiency mandates are creating a long-term tailwind for automation. Highlights this quarter include expansions with the U.S. Coast Guard to modernize core systems and improve mission readiness through automation and AI. The Department of Veterans Affairs, which is automating disability claims and enhancing contact center service for veterans, and the Social Security Administration, which is migrating to the cloud to expand to our IDP solutions to help accelerate benefits processing. Our unified platform and innovation continue to strengthen these partnerships and underscore the significant opportunity ahead in the public sector, even as the federal purchasing. Looking ahead, our continued innovation is expanding what's possible for customers and delivering measurable results through the power of deterministic and agentic automation. What continues to set UiPath apart is our unified end-to-end platform architecture, delivering one connected experience from discovery to deployment, with Maestro orchestrating work across systems and our built-in governance capabilities, ensuring control, compliance, and trust. I am pleased with the progress we are making in improving the execution of our teams, and the pace of innovation across product organization is delivering for customers. We feel well positioned as we close out the year and continue executing on our vision for the future. With that, I'll turn the call over to Ashim.
Thank you, Daniel, and good afternoon, everyone. Before turning to the financials, I'd like to provide a quick operational update. This quarter reflects the meaningful progress we've made in sharpening execution across the strategic priorities Daniel outlined earlier this year, including strengthening customer relationships, accelerating innovation, and driving operational rigor across the organization. Through these areas of strategic focus, we have improved performance of our sales team. Deepened areas of strategic focus, we have improved performance of our sales team, deepened engagement, and strengthened alignment with our customers' priorities. We're partnering earlier, co-developing solutions, and scaling automation faster. Our broad installed base gives us unique visibility into enterprise workflows, helping customers connect people, robots, and AI agents to deliver measurable outcomes at scale. Our pace of innovation continues to accelerate, supported by deeper ecosystems, integrations, and advancements in our agentic automation platform. Combined with disciplined execution, these efforts contributed to another quarter of solid top-line and bottom-line performance, including our first GAAP profitable third quarter and putting us on track for our first GAAP profitable year. And we're seeing customers lean in. A great proof point of our end-to-end platform is a leading cybersecurity company that expanded to our agentic products. With support from our forward deployed engineers, they are leveraging UiPath agents, robots, IXP, and Maestro to create seamless end-to-end workflow. IXP extracts data from purchase orders across 700 vendors. Robots retrieve quote details from SAP, and agents supply confidence scores before passing the data to sales order creation. Maestro orchestrates the process, ensuring speed, accuracy, and control, which is expected to help them improve their accuracy rate from 50 to 90%. Turning to the quarter, unless otherwise indicated, I will be discussing results on a non-GAAP basis, and all growth rates are year over year. I also want to note that since we price and sell in local currency, fluctuations in FX rates impact results. Rates have remained largely stable since the time of our last earnings call through the end of the quarter, and as a result, there is no incremental FX impact to our third quarter results. Third quarter revenue grew to $411 million, an increase of 16%. Normalizing for the year-over-year FX tailwind of approximately $5 million, revenue grew 14%. ARR totaled $1.782 billion, an increase of 11%. This included a $6 million year-over-year FX tailwind. Net new ARR was $59 million. We ended the quarter with approximately 10,860 customers. We continue to be successful in signing new enterprise logos that align with our strategy of targeting long-term customers with a propensity to invest, including new logos like Newfield Health, Research Holding, and an Australian brick manufacturer, which selected UiPath due to the breadth of our agentic automation platform, and they will be leveraging UiPath robots, agents, IXP, Maestro, and process mining to automate sales order processing. As with prior quarters, the vast majority of customer attrition continues to be on the lower end. Customers with $100,000 or more in ARR increased to 2,506 and continue to have a strong dollar-based net retention rates, while customers with $1 million or more in ARR increased to 333. Dollar-based gross retention remained best in class at 98%, and our dollar-based net retention rate was 107%, underscoring the durability of our customer base as they embrace our agentic automation solutions. Adjusting for FX, dollar-based net retention rate was 107%. Remaining performance obligations increased to $1.265 billion, up 12%. Normalizing for the FX tailwind, which was approximately $20 million, RPO grew 10%. Current RPO increased to $840 million, up 17%. Turning to expenses, we delivered third quarter overall gross margin of 85%, and software gross margin was 91%. Third quarter operating expenses were $261 million. We delivered our first GAAP profitable third quarter with GAAP operating income of $13 million, up from the prior year GAAP operating loss of $43 million. GAAP operating income included $71 million of stock-based compensation expense. Third quarter non-GAAP operating income was $88 million, representing a 21% margin, up more than 700 basis points year over year, and driven by our continued focus on operational efficiency. Third quarter non-GAAP net income was $85 million, which excludes a non-recurring non-cash tax benefit of $184 million from the release of a valuation allowance on certain deferred tax assets. Third quarter non-GAAP adjusted free cash flow was $28 million. We ended the quarter with a healthy balance sheet of $1.5 billion in cash equivalents, and marketable securities, and no debt. Now, turning to guidance. We are pleased with the team's execution and what continues to be a variable macroeconomic environment. We continue to maintain a prudent outlook and guide to what we see in front of us. As Daniel mentioned, we are pleased with the progress of our public sector team. As a reminder, while we are encouraged by early traction with our agentic capabilities, adoption is still in its early phases, and we don't expect a material top-line contribution in fiscal 2026. Lastly, since the end of the quarter, the Japanese yen has depreciated against the US dollar, creating a headwind to fourth quarter guidance. Turning to the specifics of our guide, Despite the incremental FX headwind from the yen, we are raising guidance for the progress we've made on our operating priorities and the strength we are seeing in the business. For the fourth fiscal quarter 2026, we expect revenue in the range of $462 million to $467 million. This range reflects an approximately $3 million headwind driven by FX rate movements since we provided guidance on our second quarter earnings call. ARR in the range of $1.844 billion to $1.849 billion. This range reflects an approximately $3 million headwind driven by FX rate movements since we provided guidance on our second quarter earnings call. Non-GAAP operating income of approximately $140 million. And we expect fourth quarter basic share count to be approximately 536 million shares. And finally, we continue to expect fiscal year 2026 non-GAAP adjusted free cash flow of approximately $370 million and non-GAAP gross margin of approximately 85%. Thank you for joining us today, and we look forward to speaking with many of you during the quarter. With that, I will now turn the call over to the operator. Operator, please poll for questions.
Thank you. And at this time, we'll conduct our question and answer session. Questioners, please limit yourselves to one question plus one follow-up question. To ask your question, press star one on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You can press star two if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. And once again, limit yourselves to one question plus one follow-up question. Your first question comes from Bryan Bergin with TD Cowen. Please state your question.
Hey guys, good afternoon. Thank you. Maybe just starting off here on some of the agentic solution traction. Daniel, I had you mention, I think 950 plus clients. Just first, is that comparable to the 450 or so last quarter using Agent Builder, or is that a broader kind of view across your agentic solutions? Just trying to get a sense of kind of that quantitative traction, if you could share that. And for the cases where you are seeing scaling past the proof of concepts, is it more about the underlying clients and their capabilities, or more so about the specific types of use cases that they're pursuing?
Thanks, Ryan. Yeah, we are seeing really good momentum across our agentic offering, and this creates a pull-through across the entirety of our platform. We are seeing some kind of consistent buying patterns emerging from POC to pilots and to some use cases into production. I would say that it's more, the highest ROI use cases are very customer specific. I don't see necessarily a single one across multiple industries or different departments. But overall, it's pretty encouraging to see, the movement from pilots into production for some of them.
Okay, and then my follow-up is on the federal business. So you had positive commentary here, probably a surprise for some given the shutdown. Just curious, was there any shutdown impact just worth calling out here in October and into November?
No, there was no direct impact from the shutdown. You got to remember, Brian, a lot of our projects are just funded, through the bills. So, and many of them are in critical operations, like in areas like the Department of Defense, et cetera. So we had no major impact from the shutdown.
All right, very good. Thank you.
Your next question comes from Jake Browatzke with William Blair. Please state your question.
Yeah, thanks for taking the questions and nice quarter. Congrats on the results. I know there's some FX impacts, but your Q4 guide implies that net new ARR could start growing again on a constant currency basis. Can you talk about the driver of that return to growth and just how we should think about the sustainability of net new ARR growth moving forward?
Yeah, I think the entire business is positive. We are really pleased with how our team executes. We see consistent execution across the board. I would like to nominate especially our teams in Americas, where we are really see signs of great traction, especially in the agentic. And yeah, I would say it's overall, it's things are improving and stabilizing.
Yeah, I would just echo what Daniel said as well. I think there is no magic to it. We talked about the improved execution, the focus, the launch of the new products, we think is going to continue to help us both, definitely indirectly in pulling through our platform and increasing stickiness and getting us deeper in customer conversations. But then, as we go through time more directly, and, we look at kind of just as the business stabilizes, there's a lot of goodness, both the consistency of the leadership, the talent that has been brought in as well. So those are factors that contributed. There's not one single, magic button or one silver bullet that we're counting on for that.
Okay, that's helpful. And then I know you're not expecting a material contribution from AI solutions this year, but for customers like that cybersecurity company that you called out in the script that are starting to put these agents and Maestro processes into production, can you help us understand what type of pricing uplift or monetization that you're seeing once we actually get these go lives in production?
Yeah, it's not about the pricing uplift. I think the first thing to note as we talked about the cybersecurity, Jake, is it's pulling through the entire platform. IXP, additional robots, process orchestration. So I think that is an important part of this. It's not agentic in isolation. It is agentic paired with the rest of our platform that really is driving value for our customers. So I see this kind of the monetization, not as a pricing uplift, but increasing stickiness, giving more conviction to deepen our platform into the architecture of our customers as customers really like the roadmap and are starting to experiment with agentic and find, tangible ROIs through the full breadth of our platform.
Very helpful. Thanks for taking the questions.
Your next question comes from Mike Turin with Wells Fargo. Please state your question.
Yeah, hey, this is Austin Williams on for Michael Turin. I just wanted to go back to U.S. Federal. I'm curious how results in 3Q came in versus your expectations at the beginning of the year related to DOGE. And then maybe just as a follow-up, anything you can add on the OpenAI collaboration, what exactly that could drive for UiPath? Thanks.
I would say that the federal business continues to be a dynamic environment for us with pockets of strength. We are really encouraged by the progress in 3Q, and I think it's returning to a new normal. The deals that we mentioned in the scripts are really solid. Team is executing well. We focus on efficiency positioning as well. The projects are long-term and strategic, not short-term. We continue to be prudent in our guidance estimations about the sector. On the OpenAI, yeah, we use GPT-5 across the board in our platform. We highlighted especially the use in one of the most innovative parts of our platform, that the product that I mentioned in the script called Screenplay, which is basically our own version of computer use or operator. But the key thing here is that we can combine the reliability of UI automation with the power of adaptability of LLM-driven computer use. And I think, to my knowledge, we are the only company that can succeed delivering autonomous UI tasks using LLMs, using this approach.
Thank you. And your next question comes from Matthew Hedberg with RBC Capital Markets. Please state your question.
Hey guys, this is Mike Richards on for Matt. Thanks for taking the question. Kind of building on that last question, there was a ton of excitement around all the partnerships you guys announced, and I think it validates your positioning and orchestration. So I was wondering, even beyond OpenAI, if you could just give some more details around the partnerships, just in terms of, is there a joint go-to-market element to any of them? I know it's early, but have you seen any pipeline build as a result of these partnerships? Just any more details. There's a lot of excitement around it. Thanks.
I would say that at this point, the partnership that we announced at Fusion are clearly into the technology enabling partnerships, and they were driven largely by our customer needs. We always praise ourselves for having an open platform that can really be flexible and customizable to customer needs. So we believe, so if you look at kind of our partnership, we believe that the foundation of delivering reliable AI in enterprise have different layers. So it has the data layer, ontology layer. So this is where our partnership with Snowflake is shining. We offer ourselves the automation, the RPA and API and agentic layers, but of course with OpenAI and Google, we use the frontier LLMs in order to power the agentic. We use NVIDIA for security and governance in regulated industry. So I think our goal is to create a set of partnership that offer a very solid foundation to deliver reliable AI into a secure and governed manner.
Super helpful. And then if I could just do a follow-up. I think before we talked about in the early days of the orchestration opportunity for you guys, it's been mostly agents created on UiPath. I was just wondering, have you seen more of a shift to third-party agents yet, or is it still, you guys are mostly orchestrating agents built within UiPath? Thanks again.
We are seeing many customers interested in building coded agents, where we have partnered with companies like LangChain, CrewAI, and Llama Index. And we are seeing right now a mix of agents that are hosted and managed by our platform that are both low code and coded agents. I think at this point it's kind of too early to see us managing external agents that are built completely outside of our platform.
Thank you. Your next question comes from Sanjit Singh with Morgan Stanley. Please state your question.
Yeah. Hey, everyone. This is Ryan Lance on for Sanjit. Just with regards to the channel, you mentioned the expansion of your partnership with Deloitte. So can you just provide some additional details around how much incremental pipeline is now partner sourced relative to a year ago? And maybe just how these partnerships can help drive additional kind of AI-related product deployments next year? Thanks.
Yeah, one is I think the quantum has definitely increased, but more than the quantity, it's the quality. So when you look at the S4 HANA migrations that are happening, and partners like Deloitte, and their presence within many of these customers, we're now involved in those conversations, and I think that is helping pull us through and being in the conversation about larger scale transformation processes. I think that is. Deloitte has obviously done a really exceptional job, and that partnership has been meaningful for us. But I think that's a motion that we're also seeing with across our teams with various partners that are there. So the quality for me is much higher quality pipeline than just a superficial quantum or a quantity number that I would tell you about.
Okay, great. And then just one follow-up. You guys have driven some pretty meaningful OpEx leverage throughout this year, and I'm just curious if you could provide any additional details around how you're thinking about OpEx investment next year to kind of support this AI product rollout and just broader monetization path. Thanks.
Yeah, of course, I'm not going to provide anything specific regarding next year at this time, but I think putting this year in context will give you a sense of the strategy that Daniel and the leadership team here are employing. So I think the first thing is we've gotten OpEx leverage by not austerity, but by discipline, and really being super focused on where we're prioritizing. So we are actually hiring in our engineering segments. We are expanding sales capacity. As we talked about earlier this year, and last year, really our focus has been continuing to drive efficiency across of our processes, being selective about overlay functions in terms of where we're investing. And I think that area allows us to get operating leverage while still being able to invest in key areas. So as we're looking at our platform, whether it's forward deployed engineers, whether it is more hands and legs at our customer sites, or just core engineering capabilities, those are areas that are, in our investment zone. When you look at our line items, we're getting leverage across every area because we're really going to all of the cost structures that exist outside of those three and really seeing what are the areas of efficiency and prioritization. And that is not just given us OpEx leverage, it's also enhanced our focus and has contributed to us being better in our execution cadence as well.
Thank you. And your next question comes from Scott Berg with Needham & Company. Please state your question.
Hi, everyone. Nice quarter. Thanks for taking my questions. When I was at the conference a couple months ago, some of the partners I spoke with really talked about a high level of pilots and proof of concepts that your customers are going through right now, with the different types of AI functionality. And I know it's not a big part of the expectations around bookings for this year, but I guess as you've seen some of them convert to actual sales or production, are there any key drivers or levers that you've learned through some of these that you can help maybe use in some of these other deal cycles you're currently going through?
Yeah, we see these patterns emerging. It's I would say that the landscape is extremely scattered right now. We have deployed our teams in various use cases across various industries. We see some particular patterns emerging in healthcare, like for instance in revenue cycle management, prior authorization, claims management, in financial services, financial crimes. But again, I think it's a bit too early to mention one particular use case where we see, like great replicable potential.
Understood. Thank you. And then, Ashim, as you look at the fourth quarter guidance, someone else had already mentioned, that the implied ARR number suggests that your net new ARR is up again on a year-over-year basis. Help us kind of think through maybe the construction of that. Is that just purely a result of the improved execution that you all have been working on this year, or is there some aspect of maybe deals that were maybe slipped from Q2 and Q3 that kind of moved in, to the expectation? And I know that AI, some of the functionality there is not a big driver this year, but are there some, expectations around maybe some bookings improvements in that category that's helping kind of drive, what your initial guidance here is?
Yeah, so let me be super clear on it. There's nothing in terms of like slip deals from third quarter or anything that is timing oriented, Scott, in any material or significant way. There's always normal course deals that move back and forth, right? Deals that were in your fourth quarter pipeline that closed early and deals that close late. That's just normal course and nothing out of the usual that I would talk about. When you look at the year-over-year growth implied within our guidance, I think there's three main factors for me. The first is execution. We are seeing improved execution across the board from our sales team. It is supported by good customer activity, meaning not one or two deals, but really broad-based activities of POCs and pilots and renewals that are coming in with more conviction about our long-term, place in the architecture that leads to natural upsells, et cetera. There is macroeconomic environment, as I talked about in the second quarter earnings call, around foreign exchange that will play a role in that year-over-year impact that is there. And then the third one is, I just think momentum. I think that we've had a good stable base now in terms of if you look at our sales stability 6 months, 9 months after kind of the restructuring that we had, completed at the beginning of the year, as well as just, a little bit of the normalization around areas like the public sector, which we've said is kind of back to a new normal. No catch up, but at least, at this time a new normal. We feel like we're still prudent on our overall assumptions on the macroeconomic environment, but it's a confluence of things that to me are at the opposite end of when net new ARR was declining, which is poor execution, foreign exchange having a headwind, and frankly, just having too much inconsistency in our strategy, as well as our organizational structure. So I'd say all three are contributing to that, to the stabilization of net new ARR you're seeing.
Understood. Helpful. Thank you.
Your next question comes from Alex Zukin with Wolfe Research. Please state your question.
Hi, this is Arsenian for Alex Zukin, and I guess congrats on the results, and also just kind of wanted to expand on what the downtick in NRR was. Was it just weakness at the low end, or was there anything else? And then you kind of unpacked what's driving that stronger new business, but is there anything that you can kind of give us in terms of Q4 expectations on that new business strength, given the three factors you just talked about?
Yeah, so look, I think when you look at it, definitely the lower end of this segment, we've talked about that. It has a little bit of pressure on the net new ARR. To give you a supplemental metric, our net dollar expansion rate for customers between 100,000 and $1 million was 113%. So that can quantifiably show kind of the lower cohort having more pressure. And I think you get a little bit of the law of large numbers as well. But as we stabilize, net new ARR, obviously the rest of the metrics begin to stabilize as well. And you can see that pattern starting, both with our third quarter results and, of course, kind of the guidance that we've provided here.
Got it. And then just to kind of follow up on kind of the same thing, you doubled the number of customers developing agents quarter over quarter and Maestro process instances. What's the uplift you've seen in those customers, and is it kind of fair to assume that into next year, as that revenue ramps, it can help sustain that NRR and offset some of that low-end weakness you've seen?
Yeah, we'll continue to contend that we're in the early innings of agentic. I think what the momentum around customer activity, it has both a direct and indirect. I think the indirect definitely has started to help us and will continue to help us. Customer pulling through other parts of our platform, investing in us as a longer-term part of their enterprise architecture. In terms of direct, scalable, direct monetization plays from agentic, we'll update everybody as we kind of get into next year around assumptions there. But for the immediate short term, there's nothing material as we cited in the script.
Got it. Thanks.
Your next question comes from Kingsley Crane with Canaccord Genuity. Please state your question.
Hi, thanks. So I think it's interesting if we think about the code red moment over the past couple of weeks, it's clear that competition among model providers is healthy. Of course, that makes integration orchestration even more valuable. Have you seen a shift in perception in the past quarter? And then from an integration activity perspective, how is heterogeneity trending? Thanks.
I don't think we necessarily see yet a shift. I think you aim at Google Gemini release. We were using Gemini in our IXP business for quite a few quarters somehow. I think we as a platform we continue to assess all the frontier LLMs, and we use frankly a mixture of them. For instance, in our IXP business, we use GPT-5 to understand better the structure and intent of a document, while we can use Gemini for specific extraction like multiple tables, imbricated tables. This is just an example, but across the platform, we always monitor and use the best of breed LLMs.
Great. And then just a quick follow-up, Ashim, you mentioned in your prepared remarks that you're partnering earlier, you're co-developing solutions earlier. This has been a big focus for this year. Just to what extent did this directly translate into improved results in Q3? And then do you think that this could be more of a future predictor of success next year?
I think a leading indicator, yes. I think anytime you're closer to customers, you are innovating with them, you're solving problems, I think it helps. And I would say what our conviction is that ROI is going to be where choices are made. And so as we're co-innovating, as we're teaming up with partners around bigger problems, I think we have a chance to have meaningful impact around ROIs, which we feel, will continue to do that. I think it also shows the relevance of UiPath. If I, in terms of the validation of the agentic framework, it's not architecture. It's real product that has real impact that both partners and customers can innovate around. And I think that is super important and a really great validation point for our product team, our sales team, and all of our customer teams combined. To answer your question around third quarter, as we've cited in the script as well in the prepared remarks, there's no meaningful impact from agentic, in our near-term results. We feel like this is continued disciplined execution. What agentic continues to do is the closer you're to customers, the more you are a part of their long-term roadmap and architecture, the more that they're willing to invest and pull through the existing parts of your platform today and, have higher level impacts within their org. And that indirect impact, we're definitely feeling the momentum and we're excited about it.
Thank you. Your next question comes from Kirk Materne with Evercore. Please state your question.
Hi, this is Chirag on for Kirk. Congratulations on the strong quarter and traction. Daniel, you've talked briefly about pre-built agentic solutions and highlighted strong modernization use cases within certain categories in the past. Which verticals do you see adopting these pre-built agentic solutions the fastest? And are you moving more aggressively into industry-specific packaged automation at all?
Yes, our verticalized approach is getting a lot of traction within UiPath. We put a lot of focus and effort. We actually did recently rework of our product and engineering teams to better address the creation of vertical solutions. In terms of industries, we focus on healthcare, financial services primarily, with an accent on revenue cycle management in healthcare and in financial services. I would say financial crimes can be one of the know your customers, anti-money laundering type of use cases we are seeing the most interest from our customers.
Okay. Maybe just one more. What are your thoughts on the balance between deterministic automation and agentic or LLM-based automation? And do you see this balance shifting materially at any point, over the next few years or a few quarters?
Our thesis is that they are very complementary and they address different steps in the business process. And in many processes, as long as a task, a workflow is well defined, people will use a deterministic automation. There is zero need to use an LLM based. You use an LLM in order to create a deterministic automation or to maintain it, to make it, to improve it over time, but you don't use an LLM to drive it. But of course, there are so many areas where you cannot have rules are either too complicated or the process is too complex. You sift through tons of documents or it involves conversational aspect of the process. So in all these areas, LLMs are an amazing complement to the deterministic automation. And I also want to mention that the orchestration piece that combine the AI-based and deterministic with humans in the loop is an essential piece that is required in order to deliver a solution that is secure, governed for the enterprise. We have continued saying that orchestration is the key. We announced our effort a year ago, and look, I'm pleased to see that across the industry, people are talking right now and realize that orchestration is a key technology in order to deliver reliable AI.
Thank you very much. Congrats again on the quarter.
Your next question comes from Terry Tillman with Truist Securities. Please state your question.
Hi, this is Dominique on for Terry. Thanks for taking my questions. So it was mentioned previously that one of the biggest customer hurdles with agentic consumption pricing is spend predictability. So have early deployments given you enough usage patterns to help customers forecast more reliably? Also just curious as to what else you all are doing to help customers get over that hurdle.
Look, we are constantly evaluating how our customers are adopting AI, and we aim to have a pricing model that really reflects the adoption of consumption of AI. We constantly monitor industry trends, and I would say the entire industry is dynamic at this point and is trying to figure out what's the best pricing. We are pretty flexible in our approach. We can price by components. We also are pretty flexible on understanding an outcome-based pricing can be for our customers. But again, I think we are in the early innings of really understanding consumption patterns across agentic AI at scale, I mean.
Got it. And then just as a follow-up, has the typical cycle time frame from an agentic POC to a production deployment shortened versus earlier in the year? If so, could you just highlight what specific efforts are driving that compression or what you all plan to do to accelerate it?
Yeah, I think we as a company understand a bit better how various use cases. We are building internally solutions, accelerators that can help us replicate experience across industries and verticals. And my estimation is this trend will continue to accelerate within next year. I strongly believe that the key to unlock huge scale AI consumption in enterprise is the prepackaged solutions where we can meaningfully accelerate the time to value. This is why, as I mentioned before, we put a lot of emphasis in building these solutions.
Great, thank you.
Thank you, and there are no further questions at this time, so I'll now hand it back to management for closing remarks.
Thank you so much for all the questions. I would like to wish you happy holidays, and as usual, we like to hear from as many as you throughout the quarter. Thank you.
Thanks. This concludes today's call. All parties may disconnect.
All right, there you have it, guys. That was a really, really exciting call. And I can't believe it. I cannot believe how many freaking analysts are still not showing up. Like, they're still all sending their interns instead of actually doing work themselves. Wall Street is so freaking lazy. And then they advise their clients on what to buy and what not to buy, and they're not even listening to the earnings call. Wall Street is literally the blind leading the blind. It's a bunch of sheep. It's crazy. It is crazy, guys. If you're a retail investor, Peter Lynch is right. If you are a retail investor and you're willing to do actual research, like what you're doing right now, listening to this call, you can beat Wall Street. They are lazy. They are lazy, Lazy. They don't even show up. They're what? Probably providing price targets for 12 companies, and they don't even freaking show up to the earnings calls? They're probably getting drunk with their friends or something. This is insane. This is disrespectful to the company that's literally going to be transforming the entire economy. It is insane how, we need AI to replace these analysts because these analysts are terrible. Like they don't even show up. They're that terrible. It would be better. Okay, I need to stop ranting. But that was a really good earnings call. Sorry for just yelling at you guys. I'm not mad at you. I'm just mad at the inefficiency of the market that we're in. But that's why we have opportunity. That's why the stock should be up 30% tomorrow. If it's not, it's because no one on Wall Street even listened to it. So now they're interns who probably have no idea how to even, they're just learning how to, evaluate a stock. They've learned all this terrible stuff from school, which teaches you how to do average. As Warren Buffett will say, it's a bunch of hogwash. I think Warren Buffett's partner Munger, he was like, before he died, he was like, I'm a little bit of a student of dementia, but I cannot even classify the dementia involved in the classical education of financial analysis because it's so bad. And you have so not only is it just a bad way to look at stocks, but then you have the interns who aren't even as good at the bad way. And then the interns are trying to tell the actual freaking analysts how a company's doing. This is crazy. As retail investors, we can actually get to the core. I was able to listen to hundreds of hours of interviews with management. Okay. All right. Well, let's go over some of these highlights. So the new automation strategy aligns with what customers want. We are delivering tangible ROI. We believe that we have a durable competitive edge. They beat the high end of all of their guidance metrics. ARR was up 11% year over year. Revenue was up 16% year over year, which is continued revenue growth acceleration. They just had their first ever GAAP profitable Q3, and they are on track for their first ever GAAP profitable full year this year, which is really exciting. Obviously, they announced a ton of partnerships at Fusion, including OpenAI, NVIDIA, Microsoft, Snowflake, Google. They said customers are moving quickly from pilot to full deployment, although there has been no meaningful contribution from Maestro AI yet, as far as specific revenue from it, but it's helping with the sell through of everything else, which is why we're starting to see the revenue growth acceleration even before we see tangible benefit from actual dollars paying for Maestro, if that makes sense. So last quarter, there was 450 companies developing agents. This quarter, so 3 months later, it has doubled quarter over quarter the number of their customers. Now almost 10% of their customers are developing AI agents, which is really exciting. So that's 10% now of their customer base in the pilot program that are going to start driving meaningful revenue growth starting in Q1 of next year. And they saw, so I didn't catch the name of this customer. I need to go back and listen to it. But one customer integrating, using Maestro saw a 95%, this is still in pilot, I believe, but a 95% reduction in time to value with tens of millions of savings. And Daniel estimates they will save $200 million over the next few years. This is from one customer. That's insane. They talked about UiPath Screenplay, which is allowing automations on any screen. So even if they don't have a specific partnership with a software, you can literally, code agents to be able to use any interface that shows on a computer screen, which is really exciting within the Maestro, within orchestration. That's really, really big. It means you can automate everything. Everything on a computer you can automate. USI Insurance Services, so I caught this name, is automating a complex workflow where AI agents take in incoming requests and automate outputs, which is going to drive $32 million in savings over 3 years. That's really big. I mean, remember, UiPath only has 333 customers that currently provide over $1 million in revenue. And if you're saving someone $32 million, they talked about at the end how they're looking at pricing based on outcomes. Let's see, where did he say that? Yeah, very flexible ways we can price. We were thinking about an outcome-based pricing. So in an outcome-based pricing, which is, I think, what Palantir does, if you're saving a customer $32 million, how much can you charge them? Like, you can at least charge them $10 million, right? You just save them 66%. And now, instead of making like 1 million off of them, you're making 10 million off of them. That's 10xing the value of each customer. Like, this is what I've been saying, guys. It's going to be crazy. That's just an example. I obviously don't know what the specific contract value is of this customer already, USI Insurance Services, but that's crazy. They talked about IXP, which is agentic document processing, which allows for advanced data extraction. Corewell Health is using IXP and is on track to redirect 1.5 million in savings this year and expect over 3 million in savings next year. And so really, really cool. This could be a customer that wasn't paying $1 million before, which now will have an over $1 million contract. So, you know, who knows? Maybe they're at like 300,000 or something now. These examples are insane. Yeah, this is literally what we were hearing from Palantir, by the way. If you go back, listen to those old Palantir earnings calls, it was literally this. And Wall Street was literally ignoring it then. And guess what? You think they're going to catch on this time when they're not even showing up to the freaking earnings calls? No, they're going to miss it again because they're freaking dense and stupid. Sorry, I should, okay. Lord, help me to speak with humility. Because humility is how you see things clearly. But it is pretty crazy, some of the inefficiency I see in Wall Street. Gartner Magic Quadrant said that they were the leader in IDP and AI augmented software testing. NRP Energy, they're helping to drive automation across SAP for them. They're seeing 30% more coverage and 1.5 times faster cycle time. They're expecting almost 3 million in savings over 3 years, 2.9 million in savings over 3 years. Everest Group said they were the IPAP leader. I don't remember what this means. Agentic processing and something. I don't know. We can do governance end-to-end and end-to-end orchestration within a single platform, Maestro. Care providers are leveraging UiPath Maestro to automate entire workflows to deal with, so this is a specific care provider, to deal with a backlog they have of claims, and they're expecting to reach 83% autonomy. I spelled that wrong, autonomy, in 1 year. 80% is crazy. Our automation, like these, if they automate claims 80%, like these customers of UiPath are literally hitting levels of automation that lemonades that. Okay, which is building all their own stuff in-house and has been AI from day one. That's crazy. Like, that's insane. Our automations can run in real time. This quarter, they released general availability of AI workflows. And by the way, there's no general availability for any of the Palantir stuff. You have to get in because Palantir is super picky. They only want allies of the West to be able to become more efficient. Whereas Palantir's, helping everyone become more efficient, which is why they're able to release general availability that you can just go on the site and play with, which is really great for doing research, by the way. We believe that we are one of the industry's most comprehensive automation platforms. I believe that as well. I think that the only automation platform that can claim to be as comprehensive as UiPath right now is Palantir. That's it. That is the only one. And for a lot of specific workflows, UiPath is better because they just have more deterministic automation tools that your AI can use. This is just my opinion, but I think I'm right. They launched Automation Cloud in the United Arab Emirates in partnership with Microsoft. The platform comes to life when dealing with the specific solutions and problems that the huge enterprises are dealing with. They're creating a new pricing model. And then, these are all the partners that they're working with. There's even more here. I didn't write them all down, but Microsoft, Google, Amazon, Salesforce, SAP, ServiceNow, Snowflake, Fireworks AI, Databricks, Anthropic, LangChain, Crew AI, Zoom, Slack, OpenAI, Box, IBM, all of these people are customers and partners of UiPath. Expanded partnership with the U.S. Coast Guard and with the VA and the Social Security Department to increase efficiency. And God knows our government needs a bit more efficiency. The crazy thing is, though, they're going to get more efficient and the government's still not going to fire any of their employees because the government is a monopoly and doesn't actually have to deal with competitive pressures that come when you're a company, which is why companies always run more efficiently than governments and why we should want as small of a government as possible. Governments are just bureaucratic cesspools because the free market is not forcing them to compete. If you hate free market monopolies, then you should hate government even more because government is literally a monopoly in the limit. There's an expanded opportunity ahead in government and public sector. I'm sure the government is going to spend a ton. I'm sure they're going to spend so much on UiPath, and it will probably actually give a positive ROI, unlike a lot of the spending that the government does and a lot of grifts and, the money that went to terrorists through Michigan recently and all that garbage. Our system ensures government compliance, accountability, and trust, which would be really nice as a citizen of the US, I gotta say. We feel well positioned as we close out the year. Then the CFO gave opening remarks. We already went over this though. This was interesting. So total customers now 10,860, customers over 100,000. So this is before we see Maestro start to just really ramp up these numbers. But even before that, customers paying over 100K in ARR is up from 2,235 to 2,506. And then customers over 1 million in ARR increased by over 10%. Dollar-based gross retention is best in class. Dollar-based net retention is 107%. So this was a drop of 1%. However, later on, in the answer to a question, the CFO and COO, he does both roles, he mentioned that net dollar retention was up at 113% for high-paying customers. So this is really big. So big customers are already seeing improved net retention, which is why I think overall we are in the trough right now. We are in the trough, and it's 107%, which is crazy. Just for example, Lemonade has pretty high retention, but I'm pretty sure it's like in the 70s or 80%. So 107 is crazy. Because, if you have a 90% retention rate, it means 1 out of every 10 customers is leaving every year. So 107% net retention rate, which for big customers we now know is up to 113%. That means that, your customers on average are spending more. So like even after some customers churn, overall the dollars that customers are paying is 13% higher for big customers every year than it was the year before, which is insane. Non-GAAP gross margin, 85%, really good. Super, super good. That's best in class. I mean, I think this is higher than Palantir. Operating expenses, sales and marketing was nearly flat. That's really good. Research and development was almost flat as well. It's incredible. And we're seeing the efficiency gains because UiPath is using Maestro internally. They're using it on themselves first. They are customer zero, eating their own dog food, or I should say their own 3-star meal. General and admin up a little bit. So yeah, this was up at 40.9 million compared to 36.4 million last year. But it grew much slower than revenue. And this is what we're going to start seeing, which is why we're going to start seeing operating leverage and profitability explode going forward. They have 1.5 billion in cash and equivalents at the end of the quarter and $0 in debt, no debt. Adoption is still in the early stages. They don't expect big contributions in Q4, so until next year. So fiscal 2027 is when they said they're going to start seeing some of these big pilots turn into huge deals. But fiscal 2027, because they're a year ahead, we just saw Q3 for 2026, is next year. So our actual 2026 next year, which is only a month away now because we're in December, is when we're going to start seeing like deals actually meaningfully start coming in for Maestro. So that's really exciting. And they're already accelerating revenue growth from 4% to 5% to 14% to 16% revenue growth over the last 4 quarters. Huge acceleration. Who knows what the peak's going to be? And we don't even see the Maestro deals coming in yet. It's just the fact that Maestro exists is increasing sell-through and deal sizes for the current automations that they're doing with robotic process automation. Because customers are like, okay, yeah, this is a partner we want to stay with because we know you're doing great things. So then the guide for Q4, including a headwind from the fact that, they have to convert dollars or they have to convert other countries' currencies into dollars for a lot of their revenue. And I guess the dollar is going up a little bit now. It had fallen a ton, so I was expecting it to go up at some point. It can't just keep on falling compared to everything else. But yeah, great guidance. And it's guidance for ARR to go back into revenue, or to annual revenue. Annual reoccurring revenue they're guiding that the growth rate is going to start accelerating. Okay, so then analysts, I said before, let's see if actual analysts show up this time. I think they finally will. I was wrong. They did not. I just can't believe it. This company is going to be one of the most transformative companies likely in the entire global economy over the next 5 years. And analysts aren't showing up to earnings calls because stock price is down 80%. Company must suck. Okay, sorry. That was probably a bad impression. And if it had been a good impression, it would have been more offensive. But yes, I'm saying that analysts are a bit retarded. And sorry if I offended everyone, but not sorry. The age of not having free speech is over. And retards are wonderful people, by the way. Okay, he asked 2 questions, but yeah, most of these answers, they were very positive. The overall takeaway is that the thesis is confirmed. The thesis that I've been tweeting about is confirmed. Everything I've been saying, it's true. I'm going to have to go in my model now because they already hit 16% revenue growth, and I'm going to have to up it because I have next year in my model that they're only going to have 16% revenue growth next year. And that is way too conservative. And even with this conservative model, I have that their fair value based on my DCF is $54 today based off of a 15% discount rate from 2035. So that's crazy. My model is too conservative, and I think that the stock is like 3, 4, 5x undervalued. Insane. It just shows you how, I don't think analysts are modeling these companies. I mean, we know that they're not showing up to the earnings calls. We know they're not listening to what the company is saying. We know they're incompetent fools. And even if they're smart, you make yourself an incompetent fool by not doing the work. I don't care if these guys have 160 IQs. If they aren't listening to the earnings calls, then they have 0 IQ. Okay, partnerships are being driven by customer needs. Yeah. Okay, I think that's good, guys. I think that's good. Very thesis confirming quarter. And like I said, I tie my own self-worth to being saved by the grace of Jesus. I think that's where my hope for eternity comes from and all of that. But as far as as an analyst, I don't tie my net worth to an idea, to a thesis. I tie my net worth or how good of a job I'm doing to how much I'm seeking the truth. And seeking the truth is what I pride myself in doing, which means if data comes in that should change my thesis, I will change my thesis because I care about having a thesis that lines up with the truth more than I care about being right about a previous thesis. That doesn't matter. So all that matters is having your thesis line up with reality. And all of the information that we got today confirms what I've been saying and confirms that I made the right decision to be almost all in UiPath with just a small position in Lemonade now. I'm really happy with that. And I am excited to continue buying more shares. We are already over 1 million UiPath shares today. So the $1.12 are up in after hours means I'm up $1.1 million in after hours. We'll see what happens tomorrow. This could disappear or it could accelerate to 30%. Who knows what the market wants to do in the short term? It's entirely irrational. But in the long term, over the next 5 years, over the next 10 years, the stock price is going to follow the fundamentals. And the fundamentals are telling me that this stock, it's going to at least 6, 7x in the next 5 years, and it could do twice that. I mean, in the bull case, it's crazy. In the bull case, net present value right now is well over $100 for UiPath, and we're trading at $15.96. So thank you guys all for watching. Remember to like this video if you enjoyed, retweet, follow us, and I will see you guys all in the future. I will probably be streaming the next Lemonade call. That will probably be the next one I stream live on YouTube and X. But if you're subscribed on YouTube and you are also following us on our video content channel, How to Invest, then you can see a lot more content from me and my brother, before the next earnings call. But yeah, I'll see you guys in the next one. Bye.